All right. Hello, everybody. Welcome back to another episode of the Sunday Futures Show. I am starting 8 minutes early because today's entire episode is going to be about tariffs, given futures are down 3%, and it's primarily based on this tariffs new agenda that Trump has officially initiated. He signed into law, which goes live on Tuesday, but he signed it late last night or around the evening time on Saturday. But the reason I'm starting early is because we got some footage from Trump. So I wanted to start early to watch this. It's about 10 minutes of him speaking just now. So we're going to pull this up. We're going to watch it, and then we'll get into the show. I'm sure there's going to be some stuff we can get from this. And one thing that is interesting here is that he did say in this 10-minute kind of pseudo press conference just now that he's going to be speaking to Canadian PM Justin Trudeau tomorrow morning. The tariffs don't go live until Tuesday morning. So as bad as it is, I mean, is there a world where they get a deal resolved before Tuesday? Maybe. But let's listen to this live. Good morning. Thank you, everybody, for being here, or actually good afternoon. Let's listen to this 10 minutes. We will look at futures after this. We will analyze everything about tariffs tonight. I got a lot of different perspectives, a lot of data that I want to present to everybody. And then at 8 p.m., we've got overnight markets opening up. Futures are down 3% on the NASDAQ, so we will see how the broader market opens. Here we go. Here's Trump talking just 15 minutes ago.
Right now, so we'll get to Panama Canal later.
Donald Trump and can hear him.
And we have some very happy people right now. Nobody thought that was going to happen. So they are home, they're safe, and they're with their families. That was a big one. Secretary of State Rubio is in Panama right now, and we're talking about the Panama Canal. What they've done is terrible. They violated the agreement. They're not allowed to violate the agreement. China's running the Panama Canal. That was not given to China. That was given to Panama foolishly. But they violated the agreement, and we're going to take it back, or something very powerful is going to happen. And as far as other things are concerned, as you know, we had a very busy weekend. We're dealing with Israel. We're dealing with Ukraine and Russia. We have meetings and talks scheduled with various parties, including Ukraine and Russia. And I think those discussions are actually going pretty well. The discussions on the Middle East with Israel and various and sundry other countries are progressing. Bibi Netanyahu is coming on Tuesday, and I think we have some very big meetings scheduled.
Do you feel that Elon Musk is delivering on his promises to you? Do you feel he's doing a good job right now?
I do. I think Elon's doing a good job. He's a big cost cutter. Sometimes we won't agree with it and will not go where he wants to go, but I think he's doing a great job. He's a smart guy, very smart, and he's very much into cutting the budget of our federal government.
Mr. President.
He's also for retaliatory tariffs from Canada.
Say it?
He's also for retaliatory tariffs from Canada. There was a rider in the order. Are you planning to increase the tariffs against Canada?
Well, it could happen. If they do anything, we will. Canada's been very abusive of the United States for many years. They don't allow our banks. Did you know that? Canada does not allow banks to go in. If you think about it, that's pretty amazing. If we have a U.S. bank, they don't allow them to go in. Canada's been very tough on oil, on energy. They don't allow our farm products in, essentially. They don't allow a lot of things in, and we allow everything to come in. It's been a one-way street. We subsidize Canada by the tune of about $200 billion a year. And for what? What do we get out of it? We don't get anything out of it. I love the people of Canada. I disagree with the leadership of Canada. And something's going to happen there. But if they want to play the game, I don't mind. We can play the game all they want. Mexico, we've had very good talks with them. And this is retaliatory. This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada, and we're not going to allow that. And by the way, we have among the lowest numbers we've ever had of people crossing our border, the lowest numbers since my administration.
Mr. President, you said, so on Truth Social, you said that you were going to cut aid from South Africa. Will you plan to cut aid across other African nations, and why South Africa?
No, it's only South Africa. Terrible things are happening in South Africa. The leadership is doing some terrible things, horrible things. So that's under investigation right now. We'll make a determination. And until such time as we find out what South Africa is doing, they're taking away land, they're confiscating land, and actually they're doing things that are perhaps far worse than that.
And on the Fed Chair Jerome Powell, he held rates. What's your reaction to him not changing the rates?
What did you say?
Fed Chair Jerome Powell, the Fed meeting was this week. He held the rates. He didn't cut them.
No, I'm not surprised. I think holding the rates at this point was the right thing to do.
Mr. President, will you, with country
Oh wow! I think he said holding the rates right now is the right thing to do. Let me rewind that real quick. As you can see, he just talked about Canada, pretty much the same stuff they said on Saturday about why he thinks there needs to be tariffs. We'll talk more about that, but I think he just said holding the rate steady was the right thing to do.
They're doing things that are perhaps far worse than that.
And on the Fed Chair Jerome Powell, he held rates. What's your reaction to him not changing the rates?
What did you say?
Fed Chair Jerome Powell, the Fed meeting was this week. He held the rates. He didn't cut them.
No, I'm not surprised. I think holding the rates at this point was the right thing to do.
Mr. President, will you?
Yeah. Wow. We got some agreement with Jay Powell and Trump. Now, it's kind of weird because Trump tweeted after Jay Powell held rates steady that he didn't like that. So I guess a little bit of a switch right here.
Which country will be next on the tariffs? Would you consider taxing the UK, for example?
Well, we're going to see what happens. It'll happen. But we'll see how things work out. It might happen with them, but it will definitely happen with the European Union. I can tell you that, because they've really taken advantage of us. And, we have over a $300 billion deficit. They don't take our cars. They don't take our farm products. They take almost nothing. And we take everything from them, millions of cars, tremendous amounts of food and farm products. So the UK is way out of line, and we'll see the UK, but European Union is really out of line. UK is out of line, but I'm sure I think that one can be worked out. But the European Union it's an atrocity, what they've done. Well, Prime Minister Starmer has been very nice. We've had a couple of meetings. We've had numerous phone calls. We're getting along very well. We'll see whether or not we can balance out our budget. With the European Union, it's $350 billion deficit. So obviously something's going to take place there.
For the European Union, what's the timeline? And are you thinking
Where?
along the line 25%?
With who? With who?
The EU.
Bitcoin just went below 96,000. We're going to finish this up, guys. It's got about 5 minutes left, and then we'll get into the show for today.
How much?
I wouldn't say there's a timeline, but it's going to be pretty soon. No, I'm not concerned. We may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that. We're going to change it fast. We're going to make America great again. We have to focus on our country. We have tremendous potential if properly used, and we have to focus on our country. Tremendous deficits with China, tremendous deficits with the European Union, tremendous deficits with Mexico and Canada. And why? What's the purpose of that? Why would we have deficits? And yet you look at, if you look at pharmaceuticals and drugs, if you look at various products, it's much cheaper in other countries. We're not going to allow that much longer. We're not going to take it. Well, it's been run by a bunch of radical lunatics, and we're getting them out. USAID, run by radical lunatics, and we're getting them out, and then we'll make a decision.
Spoken with anyone from Canada or from Mexico since you appointed?
I've spoken with people from Canada. I've spoken with people from Mexico, and I've spoken to a lot of other people too.
Prime Minister Trudeau, or
I'm speaking with Prime Minister Trudeau tomorrow morning, and I'm also speaking with Mexico tomorrow morning.
The tariffs don't go live until Tuesday. So if he's meeting with Mexico and Canada tomorrow morning, I don't want to be the permabull here, but is there a world where they come to a conclusion? Because we know this is not good for anybody. And by Tuesday, Trump's like, well, I got a deal. Who knows? Who knows?
And I don't expect anything very dramatic. We put tariffs on. They owe us a lot of money, and I'm sure they're going to pay.
Would you send troops to take the Canal of Panama?
About what?
Panama, the Canal of Panama. Would you send troops?
I don't think troops will be necessary in Panama. What Panama has done is terrible for national security for this part of the world. And, 70% of the signage on the Panama Canal was written in Chinese. That's not right. So it wasn't meant for China. It should have never been made. The deal was a ridiculous deal. We lost 38,000 people building the Panama Canal, one of the great wonders of the world. 38, think of it, 38. It was the most expensive project ever built by this country, if you take it forward. The most expensive project ever built. We lost 38,000. And what happens? China owns it all of a sudden? It's not going to happen. We're not going to let that happen. We have national security concerns, and they wouldn't let it happen either.
Mr. President, what does Canada and Mexico need to do for you to lift the tariffs? What are specifically you want?
That have to balance out their trade, number one. That got to stop people from pouring into our country, and we've stopped it. They haven't stopped it. We've stopped it. They have to stop people from pouring in, and we have to stop fentanyl, and that includes China. Fentanyl has killed this year at least 200,000 people. It's pouring in from China through Mexico and Canada, and they've got to stop it. And if they don't stop it, the tariffs are going to get worse, a lot worse.
Mr. President, I'm going to the border.
All right. Well, welcome to the show. We got 10 minutes until the overnight markets open, and late last night on Saturday, Trump officially signed tariffs into law. Again, they go live on Tuesday, not tomorrow, from my understanding. So technically, there's a couple days until they go live. But if you take a look at the futures, we're red. We are red. Small caps down 3.3%. The NASDAQ down 2%. S&P down 1.7%. Dow Jones holding off the best down 1.2%. And then you got the VIX that is up 11.9% as volatility starts to go higher. Bitcoin as well, right here at 96,000. Okay, so here's my thoughts. Here's my thoughts on kind of what I'm thinking, how I'm positioning this. I wrote a couple thoughts this morning on Twitter as well, for those that check it out. Here's the thing. I don't know what the implications are going to be about tariffs. We're going to try to understand that, talk a lot through it tonight, go through some details, some data that I've looked at on the historical precedent that tariffs set. But one chart that I think everyone should pay attention to, if Trump is not bluffing about tariffs, which he signed them into law, so he's definitely not bluffing. The question is going to be, does he come out with a deal tomorrow after talking to Canada and Mexico, which maybe it happens, maybe it doesn't. But this is a undeniable chart right here. January 2018, January 22nd, 2018, Trump instituted his first set of tariffs, and we saw the S&P 500 take a little bit of a nasty dip. Now, we recovered towards 2019, and we were up 30% that year. But 2018, it definitely, if you were trading around Christmas 2018, it was very, very volatile because we also had rate hikes in 2018, and we got some cuts back in 2019. So if the market follows the precedent that Trump had back in 2018 when we had tariffs in place, obviously there's going to be some short-term pain. Whether you agree with tariffs, don't agree with tariffs, I mean, ideologically, you can have your own beliefs about that. The broader question here is, what implication is that going to have on the markets? So given how futures are reacting, and I know everyone's going to ask about this anyway, these are my thoughts on what does it mean to raise cash. I think if you are going to sell anything in your portfolio, this is at least how I philosophically think about it. There's three elements to this. Number one, you sell the stocks you're unemotional about. So if you want to raise cash just for your own mental well-being, your own, just like, hey, I want to have some cash on the side, get rid of stocks that you don't care about. Number two, you sell stocks that you are slightly positive, break even, have a small loss on. If you're up by 1% or down by 1%, that's a reasonable time if you need to raise cash to get out of that position. Obviously, if you simply just need the cash and you don't care about the emotions attached to that stock, and you don't care if you're down like $100, $200, $1,000, like you just want to raise the cash because you'll be you'll be able to deploy it in a different way. And then the third sort of philosophy here that I have on raising cash is you don't get upset about raising cash, because the number one rule is to protect your cash, not lose it. Right? That is the number one rule at the end of the day. So how would I do this for my portfolio? I would not sell my Palantir or Hood. Obviously, I have great averages on both of those companies. I'm deeply concentrated in both of those companies, and they're long-term convictions, which means the dips are buyable. If Hood goes back to 40 or 35, or Palantir goes back to 60 or 55, I want to have cash to buy those dips. Right? And I'm sure everyone has different stocks in their portfolio that they want to have cash to buy dips on, simply because you love those stocks a lot. However, what would I sell? Well, I would sell the 50 shares of Google I bought last week at 195, because I don't care about Google. I have no emotional attachment to Google. I also have calls on Google, so it's not like I'm completely out of the Google position. And I bought them at 195. Google's at 200. I think it's going to open probably at that 195 range in about 7 minutes when the overnight market's open. I have no problem selling those 50 shares of Google. I get to raise $10,000, and if Palantir gets it down to 50 tomorrow, we'll talk about Palantir, because Palantir is reporting on. You thought SoFi was reporting on the worst day in 2025. Palantir looks like they're going to be reporting on the worst day of 2025. But if there is a massive dip on Palantir, not even because of the earnings, but because of the tariff volatility, I want to be able to buy that dip. I'd rather not have that money in Google. I bought 400 shares of Snapchat last week at 1070 for a swing trade. I'm probably not going to sell that, because I do think they're going to have good earnings, and February 7th is a couple days away, so I'll see how that plays out. But the point is, when you're selling or raising cash in a portfolio, you just get out of the stuff you don't care about, right? And that is the easiest philosophy I have learned over the past couple of years when it comes to raising cash, especially if you want to raise cash. Now, some people may say, well, what if this is on August 5th and you sell, but it's not a good thing to sell, because then you're going to be buying back a couple of days later as it starts to rebound. That's fair. It's never a perfect time or a non-perfect time to raise cash. It is always one of those things that you have to make a subjective decision on, based on your personal situation in the market, and also based on how much you want to embrace the volatility. So on August 5th, for example, I didn't sell, I went deeper in. And I know a lot of you guys did, and that ended up being the right decision. Right now, you might not want to do that with the S&P trading at all-time highs, right? Like, you might want to say, well, I kind of just want to chill out for a bit. I don't want to deal with the volatility and embrace buying the dip, especially because it's February, not August. And so we're kind of, at the beginning of a year versus at the end of the year, where we all kind of knew the market was going to naturally do well. So that's my philosophy on it. Now, here's the question. Do you raise cash or not? I think the answer is yes. I think, I mean, at least I will definitely sell my 50 shares of Google. There's no emotional attachment there. I would love to raise that 10,000 back and keep it. Not going to be selling NVIDIA. I think NVIDIA has already gone through enough pain. Is it probably going to go through more pain when the market opens in 5 minutes? Yes. I mean, now it looks like that 110 area in NVIDIA is fully in play. When the NASDAQ goes down 3%, there's no way NVIDIA, Apple, Microsoft, Google can necessarily survive that unscathed. But I'm more concentrated in NVIDIA, so I don't want to really get rid of that position. But the point is, I do think having some cash on the sidelines is not the worst thing in the world, given some of the volatility we're entering into. Now, if Trump can reach a deal with Canada and Mexico tomorrow and these tariffs are off the table, what's the worst case? You raise a little bit of cash and then you get to redeploy. So the example here is, if my Palantir average is 20, I'm not raising cash even if Palantir's 80 and you think it's going to go back to 60 on earnings, because I don't think it's ever coming back to 20 again. But if my average on Google is 195, and I think Google might go down to 190, or I think Google might stay at 196, whatever, I have no problem buying Google back at 200. Those $5 don't make a difference, right? So I think the philosophy when it comes to raising cash has to be, what positions do you want to be in? What positions do you not want to be in? And then what level of cash do you want to have on the side for your portfolio? For example, for me to get back into Palantir, if it does drop to 50 on some dramatic dip, you need to have cash to do that, right? And it's not easy to get the cash to do that unless you make trade-offs in your portfolio, unless you have cash on the sidelines already. And that calls for some tough decisions that you have to kind of take into effect. So that's how I'm thinking of this right now. In 4 minutes, we're going to see how the market reacts. In general, dude, this doesn't feel like August 5th. This kind of just feels like a thing Trump said he would do that no one thought he would do. That's what it feels like, right? It feels like Trump said he would do this. We had that Reuters report on Friday that said, oh, he's not going to do it till March 1st. The White House came out. They said, no, we're definitely doing the tariffs. And then they ended up doing the tariffs on Saturday night. And now everyone's like, oh, so he was serious. And because he was serious, now we're getting a lot of analysis from the broader market in terms of how they're going to interpret this. I kind of feel like this is going to be a head fake. That doesn't mean raising cash is a bad thing, even if it's a head fake, because again, the number one rule is to keep your money, not lose it. And sometimes you just have to have risk management when it comes to different parts of your portfolio, especially when you're in a position that you don't care about. Like if you just don't care about that position, I'd rather be on the side of conservative versus hold on. Like Robinhood back in 2024, August, I really cared about that position and I went deeper into it. I know a lot of you guys had your own different positions, like NVIDIA at 90, right? People went deeper into it. This doesn't feel like August 2024. This feels like a lot of people have made money because of buying the dip on August 2024. And now it's a question of protecting it. And if it's a question of protecting it and you have deployed cash in the past month and you can get out, less than 1% down, break even, maybe a little bit of a profit, then that's not the worst thing in the world either. Granted, I do feel like this is going to be a little bit of a head fake, and there's some reasons why I think it's going to be a head fake. We're going to talk a lot about that after the overnight markets open, because I have a lot of things I want to get into, especially going into the numbers around what our relationship in terms of the United States is to Canada's GDP and exports and Mexico's GDP and exports, because it's not pretty for Canada and Mexico. It's not easy. Or it's not pretty based on the numbers I'm looking at for those two nations. And someone's going to have to fold soon, because there cannot be a trade war here, because America's going to win. Now, what I mean by America's going to win is not like the market's going to go up in America. It's just we have more leverage based on the raw numbers, but everyone's going to be in pain. So inevitably, Canada and Mexico are going to capitulate, and America's probably going to want them to capitulate sooner than later, because America doesn't want this to go on forever. I don't think Trump wants that to happen for the next 6 months, but they have a lot more to lose than we have to lose in the short term. And so I think from that perspective, there's going to have to be some inevitable agreement. Maybe it happens tomorrow. You never know, dude. Maybe Trump, when he gets on the phone with Trudeau and the Mexican president tomorrow, there is a resolution to this whole thing. And this is a massive head fake, and markets are going to rebound excessively. I mean, look at Bitcoin, dude. We haven't hit 96,000 in like 3 weeks. The fact that we're here right now is kind of ridiculous. And it's only based off, the tariffs decreasing global liquidity, which we'll get into that analysis later. But the fact that it's getting this risk off means that the entire market, not just the NASDAQ, is definitely interpreting tariffs as not the best thing in the world. And so now we got to deal with this. Now we got to deal with this going into February. Selling Google ahead of earnings. Yeah, well, again, it's just to raise cash. I still have Google calls that I'm long on, so that's another reason I would sell the position, just to take a little bit of cash on the sidelines. But outside of that, it doesn't matter going into earnings. What matters more is just like, how do you feel portfolio percentage wise in terms of the comfort you have on the certain names that are, big positions for you, and then positions that you don't care about. All right, overnight markets are open. Robinhood down 1.4%. Below she goes, 49.56. Bitcoin 96.7. The S&P 500 down 1.62%, 592. JetBlue down 0.08%. Amazon down 1.13%. Google down 2.9%. There you go. 198 on Google. Baba down 3.38%. Meta down 2.7%. Hims down 5%. Where is Palantir? Palantir down 2.4%. Tesla is down 3.86%. Palantir, Robinhood's now down 5%. There she goes. There she goes. Red, red, red across the board. SoFi, goodness, $15. I think SoFi is down 5%. Let's see if it normalizes here. SoFi's down 5.58%. Let's see if it normalizes or if it continues with some of this pain. ARM is down 5.4%. Taiwan Semi down 3%. Vertiv down 5.5%. Vistra down 4%. Dell down 2.7%. Where is NVIDIA? NVIDIA is down 5%. 114. New lows on NVIDIA. New lows on NVIDIA. Robinhood down 7%. She is going to fall with the rest of the market. Intel's down 1.75%. SoFi's down 9%. That's ugly. Google actually is not down that bad. It's down 3%. I am definitely selling my Google right here. This is my way of raising cash right here. So let's sell all our Google. I don't even know if it's going to sell, though, on the overnight markets. Will it actually sell? Dude, I wonder if Robinhood is going to be able to handle this volume. I wonder if Robinhood is going to be able to handle this volume today. This is going to be aggressive on Hood. Yeah, look, I don't know if Robinhood has the overnight markets open right now. They didn't take my order. They said it's queued for market open. Let's see if this overnight market is even working. If your guys are on Webull, you can let me know if you're able to sell anything. We're definitely going to be a little bit of a bloodbath here. Definitely going to be a little bit of bloodbath. S&P down 1.6, SMCI down 5%, Amazon down 3%, Google down 3.4, Meta down 3.8, HIMS down 6.7. You know, this was the most predictable collapse this whole day. Like this entire day at 11 a.m., I woke up, I checked my phone, I saw all the tweets about tariffs. I was like, yeah, this is going to be nasty. And then throughout the day, I was like, yeah, it's going to be nasty. And now it's nasty. There it is. Palantir down 4%. It's nasty. It was one of the most predictable declines that I think anyone could tell what happened from tariffs, but it is officially happening. It is officially happening. SoFi under 14. Do a limit order? No, but they're not even giving me the ability to do a limit order. Oh, no, yeah, they are. Now, yeah, they are. Never mind. Okay, so I'm going to sell them right here. Let's see if I can... Yeah, I'm selling them for $1 above. I bought them at 194. I'm selling them for 196.5. All right, there you go. Got 196.5. All right, got rid of Google. So we raised a cool 10,000 of cash right there. And again, the logic behind this is I already have exposure to Google. I have 2 long calls, and I have covered calls against those, which are going to print tomorrow. So that's nice. But in terms of raising cash, I don't need those extra 50 shares of Google. So at least we raised a little bit of cash right there. Yeah, it's ugly. It's ugly. It's ugly. Intel down 2%, S&P down 1.6. Where's the NASDAQ? The Qs are probably down 2%, 510. NVIDIA, wow, 7% on NVIDIA. Oh my goodness. There you go. NVIDIA 112. That's why I need to sell Google, because we got to keep buying the dip on NVIDIA, dude. Oh my gosh. SoFi is down 11%. Why is SoFi getting hit this bad, bro? Like, I get the market's getting hit, but it's still a bank. It's like, are tariffs going to ruin a bank? Like, goodness gracious. TSM down 3.5, Dell down 3.2, ASTS down a bit. Rocket Lab doesn't trade overnight. Royal Caribbean down 1.72. Where's the Mag 7 plays? Apple's down 4%. Wow, Apple's down 4%. Holy crap. That's not a joke, dude. Apple down 4% is like 4%. Microsoft down 2%, Meta down 3.5, Google down 2.8, Amazon down 4.9, NVIDIA down 7%, Tesla down 5.49%. Here's the thing. Again, let me make it very clear. I kind of think this is going to be a head fake, and I don't think this is going to be some catastrophic March 2020 down 15% across the markets. However, if you want to raise cash and you have external parts of the portfolio that you just don't care about, like 50 shares of Google or 100 shares of Snapchat or whatever, I don't think it's the worst thing in the world if you can get out right now and save that money. Now, if your Google average is like $120, I would not be selling Google, right? Like, because you're probably not going to see 120 on Google. But if your Google average is 196, 197, like it's not the worst thing in the world just to have a little bit more safety on your side and take some cash out. Robinhood right here down 9.5%, MicroStrategy down 9%, Marathon down 0.5%, Coinbase down 9%, and then Bitcoin right here 96.5 currently right now. How is HIMS doing? Let's take a look at HIMS. We got a lot to talk about, folks. We're just going through some of these stocks, and then we'll get into the tariff discussion. HIMS is down 9.2%. Again, Tesla down 5.5%, Palantir down 5%, Robinhood down 10%, 9.87. Robinhood, very high beta. It's going to get hit. NVIDIA getting a little bit of recovery from 110 to 112, but still down 6.6. Intel down 2.2. Apple again down 4%. Bitcoin looks like it wants to go below 96,000. And then Amazon getting hit down 5%. At least the covered calls on Amazon and Google are going to print tomorrow. But outside of that, we're going to get some nasty, volatile moves in the morning. ASML is down 5%. ASML is down 5%. Oh boy. We are seeing some red. Rocket Lab's down 10%. So it's not is it on Webull? Because it's not on Hood. It's probably, if you guys have it on like some of the international exchanges, it makes sense if it's down 10%. So Rocket Lab's basically like $27 right now or something, 26. That's probably making sense. Hood down even more. Yeah, again, Hood's a proxy on the market. Hood is a proxy on the market. So Robinhood right here down 10.11% of the market takes a hit. Hood's going to take a hit. Now, the good thing is Robinhood has earnings coming up, and I think they're going to crush those earnings. But to be honest, and, you know, I mean, we'll talk about Palantir in a bit, but not the best day in the world for Palantir to report either. Now, granted, we said that August 5th. August 5th, Palantir reported, and they had a great earnings, and then, you know, the market recovered. Palantir was up like 20%. I don't know if the same thing will happen again, but once again, Q4, Palantir reports on one of the nastiest days, which is the first day after Trump has officially instituted tariffs. Now, granted, I'll say this again. If Trump gets a deal with Canada and Mexico tomorrow, which again, he said he's going to get on the phone with, I think this reverses pretty quickly. But that's if a deal is reached. You would think they could get a deal reached. I don't think Trump wants to see tariffs in place for the next 6-7 months. So they might work hard to get a deal done. And that might be a very simple opportunity where this is a great buy the dip. But it also might be one of those things where they don't get a deal done. And then you're just going to have to wait for the next few months to see how this gets resolved, which is exactly what happened in 2018. This has happened the same way in January 2018. By December, we had a little bit more of a bloodbath. And then finally, J-Powell cut rates in 2019, and we started getting back to growth. But this is currently the issue we're seeing right now. Apple right here down 3%, S&P down 1.7%, SMCI down 8%, Amazon down 3.6%. I kind of do think this is the bloodbath. Like if Nvidia's down 7%, does Nvidia go down 10%? Really? Or does it kind of bottom out at 7%? Now, granted, when Nvidia was at 125, falling from 142 last Monday, I think everyone felt like that was enough pain. And then Nvidia ended up going all the way to 116. And now Nvidia's at 113. So it begs the question, where is the bottom? This is why it's very hard to buy the dip, because you just never know. And that's the whole point of dollar cost averaging. But nonetheless, I don't think anyone can definitively say, all right, 5% extra down on Nvidia, that's your bottom. 113 is not going to be breached, because you just don't know what happens at 9:30 when the entire world begins trading these equities. All right. Well, we got some red. So let's talk about it. Bitcoin right there. Wow. 96.1. So Bitcoin. Oh, we hit 95 on Bitcoin. I didn't even notice. We hit 95.7. We rebounded from 95.7. But now Bitcoin very close to going back to the 95s. Here's another thing that's mooning right now, which is not good for Grab, unfortunately. I wrote a long post about Grab on Twitter over the weekend. I know a lot of people got to check that out, understand my thesis on it. But unfortunately, Grab might face some headwinds tomorrow, along with Nubank and Mercado Libre, because the dollar is up almost 1.5%. This thing was almost at 107. I think it was at 107.3. That was the bottom a couple days ago. And tariffs mean a stronger dollar. I did a lot of research on that today. Do tariffs imply a stronger dollar? And from everything I saw, yes. The tariffs mean we have. So if you're traveling, congrats, because your dollar is worth more in a lot of other places. But it does mean the dollar gets stronger. And that's not good for some of the international stocks. The 10-year right now, I think, is relatively. Yeah, see, this is the weird thing. The 10-year is not moving up on this, which is weird, because if the whole point of tariffs, which are bad for the market, is that it creates inflation, you would think the 10-year gap's up on this, but it's not. And I think that's still a little skepticism from the bond market around where they think the actual implementation of these tariffs are going to be. Now, the equity markets are going to react in a much more volatile way than the bond market, right? Because equities in general are just more high beta, more scary. People get out of them. It's easy. It's very liquid. But the bond market might not be assuming that tariffs are going to go into play as easily as the equity markets might be assuming. And maybe that's why we're seeing an actual reduction in the 10-year yield right now. Or again, people could be buying up bond yields because they're getting out of stocks, which is also fair. But nonetheless, 10 years not really going up on this news. All right, so let's talk about tariffs. So how did my morning start out? I woke up and I checked Twitter. By the way, on Saturday, bro, I slept till 2 p.m. You know, all that sleep that I didn't have throughout the week, because last week was just a crazy week. I slept till 2 p.m. on Saturday, bro. I woke up. I had slept for like 12 hours, bro. It was kind of wild. But I woke up early on Sunday, started reading Twitter, and I saw that everyone was freaking out about tariffs. Now, tariffs, again, Saturday night, they went live. And so I started doing a little bit of research, trying to understand them a little bit more, get a bit more educated. Last week, I became a DeepSeek expert. This week, I've become a tariffs expert. That's just the nature of being a content creator. So you got to learn about this shit quick. And then throughout the day, I came to the conclusion pretty quickly. So it's probably like around 1 p.m. is when I got done with my first hour of research. And then I had some meetings, and then I got back to research back at 4 p.m. But by 1 p.m., I was like, yeah, futures are not going to be nice. And I think I even tweeted at 1 p.m. or maybe 12 p.m. I don't think futures are going to be pretty on this. Based on the preliminary research I did, I kind of felt this shit's going to be ugly. This shit's going to be very, very ugly. And it's pretty ugly. So this is what I tweeted. I think futures will open red. It kind of feels like a little Trump tariff crash. Hopefully it doesn't last too long. But nonetheless, I think that's kind of how we're marketing this tariff volatility right now. So having said that, let's get into some research points. What did I learn? What did I understand? And what are we going deeper with? First of all, let's just read what Trump said. Let's start off with what Trump said about tariffs this morning. We heard him talk a little bit just now. For those that are just joining, he did an interview with Fox, after he got off Air Force One. And this is kind of the core thing that he said this morning that got everyone to realize that he's not messing around here. So on Truth Social, Trump posted, the tariff lobby headed by the globalist and always wrong Wall Street Journal is working hard to justify countries like Canada, Mexico, China, and too many others to name continue the decade-long ripoff of America, both in regard to trade, crime, and poisonous drugs that are allowed to freely flow over into America. Those days are over. The USA has major deficits with Canada, Mexico, and China in almost all countries. I think our deficits with the EU are the worst. It's about $300 billion. We owe $36 trillion in debt, and we're not going to be the stupid country any longer. Make your products in the USA, and there are no tariffs. Why should the United States lose trillions of dollars in subsidizing other countries? And why should these other countries pay a small fraction of the cost of what a U.S. citizen pays for drugs and pharmaceuticals? As an example, this will be the golden age of America. Will there be some pain? Yes, maybe, and maybe not. Now, that maybe and maybe not to me is kind of him saying, I might get a deal quicker than what you guys think. That's what I'm reading that as. And that's basically what he said, kind of implicit in the recent interview he just did 20 minutes ago. But he is acknowledging, yeah, there's going to be some pain. But we will make America great again, and it will be all worth the price that must be paid. So you got Trump basically acknowledging that, no, it's going to be ugly. And I need you guys to he's basically telling the American people, I need you guys to realize the reason it's going to be ugly is because this is a decade-long ripoff that has been happening for the United States. So then it begs the question, what is he talking about, right? What does he mean by this decade-long ripoff that has been hurting the United States? And when you dive a lot deeper into kind of understanding what is happening, where this is coming from, why Trump is thinking about this, you start to realize, okay, so there are a bit more unfair tariffs you can argue from Canada into the United States and from Mexico into the United States. And in particular, there's also issues with fentanyl and immigration. I'm not an expert on that stuff, but this is just what the Republican administration's perspective on this is. There are conditions for getting rid of the tariffs because they can be removed, which is a very important thing to understand, is Canada and Mexico cleaning up their border. So this is what JD Vance, which is the VP, said here right now. Mexico sends a ton of fentanyl into our country. Canada has seen a massive increase in fentanyl trafficking across the border. There are 3 ways of stopping this. The first is ask nicely, which we've done. It's gone nowhere. Now we're on to the consequences phase. Spare me the sob story about how Canada's our best friend. I love Canada and have many Canadian friends, but is the government meeting their NATO target for military spending? Are they stopping the flow of drugs into our country? I'm sick of being taken advantage of. So what Vance and Trump are saying is, wait a second, we're subsidizing a ton of their costs. One of the ways we're subsidizing them is picking up the slack when it comes to NATO spending and defense spending. We are allowing them to be one of our biggest trade partners, but we are constantly having to seize fentanyl at the border. Again, this is their argument that Vance and Trump are giving out. And basically, we're tired of it. And so do I think the United States wants to put a 25% tariff on Canada? No. I do not think that's Trump's agenda at all. I think he just wants to sound and act like he's so serious about this that it forces Trudeau's hand to finally capitulate into giving him something that he wants. What exactly does he want? I don't think anyone knows. I really don't. And I think Trump probably wants something, and they're going to, he's going to make it very clear to Trudeau tomorrow what he wants. But nonetheless, he wants something. And because he wants something, this action seems to be a bit more serious, literally because he signed it into law, versus something that's more of a vague threat that he's implying at a campaign rally. Like it's law, it's officially in, and now it's there. For those that didn't see the official tariff listing that was there, let me just share this real quick, and then we're going to get into some of the economics around this. It is a 25% tariff on Canada and Mexico. It is a 10% tariff on China, and it is a 10% tariff on energy products from Canada as well. 10% tariffs on energy products from well. So he's actually leaving out oil to not be as bad, right? From an export perspective, because obviously that would explode oil prices and no one wants to see that. But 25% tariffs on pretty much everything else in Mexico and Canada is what he put on. So what does this mean in the context of the numbers? I think this is the best way to start this conversation and begin going deeper into why Trump thinks he has this leverage. Mexico exports to the U.S. as a percentage of GDP are 35%. Let me say that again. Mexico's exports to the United States, meaning us buying their shit, is 35% of their GDP. That's over a third of their gross domestic product. Canada is 22%. So that's over a fifth of Canada's exports we buy, which is 22% of their GDP. Now, U.S. exports to Canada, the stuff we sell them, 1.5% of our GDP. The stuff we sell to Mexico, 1.2%. Obviously, you can see right here, there is a bit of a discrepancy to the tune of 30 times, or if you're Canada, to the tune of 20 times. And Trump thinks that he has leverage in getting Mexico and Canada to come to the bargaining table and give him what he wants. What exactly does he want? Again, I still don't think anyone fully knows, but he wants something. And whenever they make this deal, hopefully tomorrow, we will probably know what he got Trudeau to capitulate to. Now, what do I mean by this in terms of it's going to affect Canada more than the United States, at least in the short term? Take a look at this article. U.S. car prices face potential 3,000 increase as Trump tariffs hit the auto sectors. The auto sector is going to shut down within a week, said the president of Canada's Automotive Parts Manufacturers Association. At 25%, absolutely nobody in our business is profitable by a long shot. The duties would immediately hit almost 1/4 of the 16 million vehicles that are sold in the U.S. each year, as well as the parts and components that go into them, an import market that totaled $225 billion in 2024, according to research from the automotive consultant AlixPartners. Tariffs will add $60 billion in cost to the industry, the research shows, much of which is likely to be passed on to consumers. Not good for the United States, obviously horrible for Canada, which is what the president of Canada's Automotive Parts Manufacturers Association is saying right here, and basically implying that within a week, thousands of jobs could be lost and we could shut down hundreds of suppliers because car prices going up by 3,000 would decimate demand, and you can't stay in business if people are not buying cars. So this is not good for anybody. Like, there's no world in which this is good for anybody. And I think that's why the futures are reacting as negatively as they're reacting right now. However, the reason I think the futures are not collapsing 5 or 10% and only being down about 2 to 3% is because I still think they believe that there is a world in which this gets resolved before it officially goes into effect. And if that's the case, that's going to be a good thing. If that's not a case, that's, going to be a world in which futures get worse. These are all the Robinhood notifications, by the way. Look at this. That's aggressive, bro. That is so aggressive. Real quick, let's just check the overnight markets, and then we'll get back into all the other stuff we have to talk about. Bitcoin 95.4. There you go. Bitcoin's taking a dump. Tesla down 4%. SoFi down 8%. Nvidia down 5%. HIMS down 5%. Q's down 2%. Hoods down 7%. Little recovery when it was down 10%. Now it's down 7%. Palantir down 3.7%. S&P down 1.6%. Google down 2.4%. Amazon down 3%. SMCI down 6%. Meta down 2%. Baba down 3%. So nothing too crazy from what we saw 20 minutes ago, but still red. Now, granted, it's oddly familiar to what happened last Sunday. Remember last Sunday, Nvidia was down to like 135 from 142, and everyone was like, all right, that sucks, but whatever. And then we woke up in the morning, it went to 125 at 5 a.m. And then by the end of the day, it was at 116. So I don't think we can use the overnight market as a gauge on if the market has priced things in or not priced things in, because last week we kind of felt the overnight markets down 5% was enough pain, and we ended up going down 17% on Nvidia. So I think 9:30 is going to really tell us how this ends up playing out. So, okay, so that's what we got going on from the Canadian and Mexico perspective in terms of exports as a percentage of GDP, which leads, again, for people to think that Trump deserves to have leverage here. And if he has leverage, then he can meaningfully find a way to potentially get a deal. Now, what is the problem with tariffs from a stagflation perspective? Well, if tariffs persist, tariffs are going to create higher costs. Higher costs get passed on to the consumer, which creates higher inflation. Higher inflation creates higher rates, or at least rates that are staying higher for longer, if not, rate hikes, but rates that aren't coming down, which has been what the market has been perceiving will happen at least until June or May, and hopefully that timeline doesn't get pushed away. If we have high rates, we're going to have less investment into the United States. I mean, it's going to be hard for companies to want to go public if they know they're going to get hit with high rates as soon as they go public to finance all their other capital activities. And then less investment is going to create slower growth. So one thesis on why tariffs are not going to be the best thing in the world is that high inflation plus high employment plus slow growth leads to stagflation. Now, Trump knows this. I don't think Trump thinks that this is something that is out of the question. Like, I don't think Trump lives in La La Land and thinks that if you put tariffs up, there's not going to be any economic effect on the consumer. I think Scott Bessent, the Treasury Secretary, also know this. However, I think they really want a serious negotiation tactic from a bargaining perspective to fulfill their campaign promises. And tariffs are the best thing they've got so far. And if tariffs are going to be the best thing they got, the best negotiation tactic they have so far, then they're going to use that to whatever extent that they can. The question is going to be, is Trudeau going to call the bluff? Right? Is Mexico going to call the bluff? Because if they're not going to call the bluff and they're going to just keep let it happening, or they're going to call the bluff and they're going to keep let tariffs continuing to be in place, then we have a full-on trade war. And if we have a full-on trade war, obviously that's not going to be the best thing in the world. So that's why we're seeing some of the red that we're having right now. Really Original says the Canadian people are ready to feel the pain, not going to lie. Well, I saw one thing today. There's a bunch of headlines coming out of Canada that they are changing a variety of different things. Let me pull this up right here. By the way, the dollar is getting very close to being worth the same amount as the euro. The Canadian dollar fell to its lowest level against the US dollar since 2003. $1 US now equals 1.47 Canadian dollars. Again, 2003. That's been the last time that has got into that level. And then here's the headline that I saw today. Ontario is removing United States alcohol from shelves after Trump's tariff announcement. Now, my joke was that the Canadians will have to get drunk on maple syrup. That's just a joke. I know you guys have your own whiskey. I know you guys have your own alcohol, but I thought it was a decent joke in the midst of all this volatility we're seeing. Nonetheless, I mean, if this happens, that's not good for U.S. alcohol companies. That's not good for imports and exports going out from the United States to Canada. Like, it's a hodgepodge of a mess. It is an absolute mess. And I think right now the broader market is trying to figure out how to interpret it. Now, the fact that futures, look, I thought futures would be down worse. We're down 3%. Like, that's bad, but it's not like we haven't seen that before. It's ugly. I mean, I don't think we've really seen it. I mean, we had a little bit of it last week, but before then, it really didn't happen till like October, where we had something that aggressive. So I kind of think the market's pricing it in, and they're like, all right, let's see if they actually get a deal done before we go deeper on questioning tariffs happening or not. But nonetheless, there is an argument that the market is not happy about this currently right now. Here's another headline that we're going to talk about. President Donald Trump's tariffs take aim at trade loophole used by Chinese online retailers like Temu and Shein. Now, to give everyone a perspective of what's going on with Temu and Shein, there's a really good thread on it that I want to read right here as well that explains why Trump is so adamant about taking advantage of, or China not taking advantage of us and really going far with these tariffs. Coinbase, by the way, is down 9.4%. Robinhood's down 5.7%. Robinhood recovering a bit from that 46 low that it was at. Rocket Lab, again, not overnight. ASML is down 5%. Hims is down 3%. Coinbase down 10%. SoFi down 8.4%. Nvidia down 6%. Tesla down 5%. SoFi down 8.5%. And then Apple right here down 2.3%. Apple was down 5% about 15 minutes ago. Okay, here's the thread. Here's the thread on this. Let's read this a little bit. Temu and Shein and all these tacky fast fashion companies that sell mostly crap have long relied on an unfair and unwarranted trade advantage. They have long been beneficiaries of what is called the de minimis loophole. This loophole allows goods to be shipped directly from overseas to American consumers so long as the value of each package is under $800 without any customs declaration. The Wall Street Journal actually did a really good piece on this a year ago when they did their deep dive into Shein, which is a company that is thinking of going public at around a $60 billion valuation. And this is how they get away with paying some taxes to the United States. It's cheap, direct, untaxed, and unregulated. It's a law that's existed since the 1930s, long before the internet and the existence of e-commerce retailers. Last year, the U.S. received 1 billion packages from China through this loophole. Customs and Border Protection cannot possibly inspect items at this scale, so things do slip through the cracks. Unsafe items, knockoffs, products made with forced labor from Xinjiang, and yes, chemicals that are used to make fentanyl. To put things into context, in 2022, Gap paid $700 million, while H&M paid $200 million in import taxes. Gap and H&M, two very large clothes retailers. Temu paid $0. Free trade, once again, is not free. It's flooding our markets with cheap, crappy, potential toxic goods, gutting our own retail markets, and allowing unsavory foreign competitors to exploit loopholes and gain an unfair competitive advantage over retailers who have to play by the rule because of geography. Gap and H&M, their headquarters in Europe, obviously that's why they don't get a chance to get away with it like Temu and Shein, headquartered in China. Now we have closed this loophole for goods coming in from China. And as you can see right here, Ryan Peterson, that runs Flexport, which is a massive supply chain company, also said de minimis entries from China are going to be shut down effective Tuesday, as per the executive order that Trump passed on Saturday night. So I think all of us, no matter if you're Canadian, Mexican, even if you're Chinese, like you probably come to the conclusion that, yeah, this is not a good thing. Shein and Temu, which quite frankly, I've ordered stuff from Temu before. I mean, it's garbage, right? Like there's some good stuff, but a lot of it is garbage. The fact that they're able to not pay taxes that other European and American retailers have to pay for shipping products domestically or internationally because of this loophole, yeah, we probably should shut that down. Now, the question is going to be, how does China retaliate based on that? Xi Jinping has already said last night that he plans to retaliate. Trudeau also announced a retaliation, which we'll talk about in a second. But I think all of us can agree that's a loophole that probably should get shut down. The question is going to be, what do we have to give up in the short term in order to shut that down, to get that long-term gain that Trump is talking about? And how much, as investors, is the market going to have to tank in order for this to eventually be resolved and inevitably priced in? This is what Trudeau said to Trump this morning after tariffs were unveiled last night.
U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time, to allow Canadian companies and supply chains to seek to find alternatives. Like the American tariffs, our response will also be far-reaching and include everyday items such as American beer, wine, and bourbon, fruits and fruit juices, including orange juice, along with vegetables, perfume, clothing, and shoes. It'll include major consumer products like household appliances, furniture, and sports equipment, and materials like lumber and plastics, along with much, much more. And as part of our response, we are considering, with the provinces and territories, several non-tariff measures, including some relating to critical minerals, energy, procurement, and other partnerships. We will stand strong for Canada. We will stand strong to ensure our countries continue to be the best neighbors in the world.
Okay, so this is the clip that Trudeau himself posted. That's what I'm playing here right now. It's a 1 minute, 32-second clip on Trudeau basically saying we will always stand up for Canada. And it is his response to the Trump tariffs that we're getting right now. Again, there is a part of me, I would say there's a good 20% part of me right now that thinks this is not going to really actually happen. This is not really going to go into effect. The implications of it would be so dramatic for no reason. I mean, like, there's a reason it should happen. Probably on China, on Canada, and Mexico. Should it happen to an extent? Yes, but 25% is aggressive. Trump knows it's aggressive. Scott Bessent knows it's aggressive. I think they just want to act firm to get a deal done. The question is going to be, is this firm enough to get that deal done? And I don't know. But I'm 80-20 right now. 80% of these tariffs officially go live after Tuesday. Again, they don't go live tomorrow. They go live on Tuesday. 20% of me thinks Trump gets a deal done. And he gets a deal done tomorrow when he calls up Trudeau and they try to resolve it in some way. Because Trudeau doesn't want, I mean, Trudeau is going to be gone in like a month, right? I don't think he wants his legacy to be ending on a trade war. Especially if the next guy comes in 20 days and is able to resolve this whole thing. And then Trudeau kind of just looks bad because he left the country with a trade war, and then, you know, someone else came in and was friendly with Trump, got it resolved. Like there's elements of me that believe this is going to get resolved and it's not going to be as dramatic as we're seeing right now. But obviously the broader market is feeling the pain of this right now. The dollar right here up 1.12%, and futures continue to be down about 3% right here. For those that are just joining, the major stat to understand about tariffs, we got a lot of other stuff to talk about, but the major thing to understand right here to me is that our percentage of exports into Canada and Mexico is significantly lower than Mexico and Canada's exports as a percentage of their GDP to the United States. And that is why the Trump administration really does feel like they have bargaining power here, because there's going to be pain for everybody, but there's going to be a little bit more pain on those guys than there is on us in the short term. And then eventually, I would imagine Trump wants to get it resolved before this becomes long-term pain that could affect the entire country. Because I think Trump also knows that if inflation goes up, that's not a good thing for his first 100 days. And it decreases, honestly, his political capital to get stuff done. But nonetheless, this is why I think the U.S. is engaging in such a fierce way to get these tariffs done. Also, the other thing that's weird about this, we'll talk about Palantir as well. We got an earnings preview. I mean, we already did an earnings preview on Palantir Weekly, but I'll go through some numbers and talk about some of the stuff I want to see tomorrow. Palantir finds a way to report always on these crazy volatile days. The other thing that's important here is that Trump said he would do this. Trump said he would do this. Like, he told us for a year and a half, he's going to fund everything he wants to fund with lower taxes, which I think he's going to be able to extend the corporate tax rate down to continue the 2017 extensions, maybe get it down to 15% for the people that make their products in the United States. And that he wanted to do tariffs. He said lower taxes and tariffs. He said this, and we all knew it, but the market was so obsessed with his degrowth and his pro-crypto friendliness that we kind of overlooked the part that was glaring us in the face that was obviously not going to be received nicely by the market, with the assumption that that stuff just wouldn't happen. And Trump basically today is saying it's happening. And he officially signed it into law saying that it's happening as well. One take that I had today was that at least the tariff is better than than an unrealized capital gains tax, right? Like, I mean, if we're going to have something bad, at least let's have some tariffs versus unrealized capital gains. I mean, the point of this is that either way, both sides were definitely going to do something that was not going to be the most friendly, because both sides have to pay for this debt. Kamala wanted to pay for it by taking people's money that wasn't really their money yet because it was unrealized, and taking a percentage of that and using that tax to fund the government, in the wealth tax, essentially. Trump's doing it through tariffs. Both of them had a totally different perspective on how to do it. Now, one thing I think that we have to remember is that if Harris did get elected, the corporate income tax, which is at 21% right now, was projected to increase to 28%. Trump's thinking of lowering that thing to 15%, right? So the Bank of America did some research that earnings per share across every company would take a 4% hit because you're literally paying more of your money in taxes. And so your net income would obviously decrease, which would mean earnings growth would decrease as well if we had higher corporate tax rates. Now, is the same 4% decline in earnings per share going to happen if we have lower corporate income tax rates but higher tariffs because of the downstream effects that's going to have on every U.S. company? I don't know. I don't freaking know. I have no clue. But I think we're going to find out over the coming weeks. And definitely tomorrow. Again, I keep going back to this whole art of the deal thing. Trump wants to get a deal done. I don't think Trump loves seeing the stock market act like this, or the broader global macro community feeling like we're getting into a trade war. And I think maybe there's a world we get a deal done. Maybe. But if we don't, let's just say 9:30 tomorrow, the market opens red, and then I don't know when they're meeting. They're probably meeting at 10:30, 11 or something, and they start talking. They are meeting tomorrow. Again, let me say, Trump, Trudeau, and Mexico are meeting tomorrow. If the end result of that meeting is nothing positive, then I think we go lower. And one of the reasons we go lower, and I don't think it's kind of fear mongering, I think it's just like basic common sense why we would go lower if there's not a resolution here. We're trading at all-time highs on the market. Like, equity markets are trading, S&P's trading at a 25 times priced earnings, and historically we traded at 17 times priced earnings. A lot of that driven by the Max 7. So it's not like we're trading at 5,500 on the S&P where like the multiple is reasonable and people could easily buy that dip. We are trading at elevated multiples. The reason we've been able to justify where we're trading at, and we've been covering it on the show every single day, is because earnings growth has been phenomenal. 75% of companies that have reported in the S&P 500 have beat on their EPS by an average of 7%. And you can't deny that. You just can't deny strong earnings growth with a stabilizing inflation dynamic with core PCE at 2.8% that we saw on Friday. And J-Powell being relatively dovish on the FOMC meeting. So it's like you put those two things together, you can have a sustained multiple. When something just comes in and takes it all away, like a tariff, that creates this insane level of macro, the key word here is uncertainty, because just like no one knows what's going to happen, like how much does China retaliate, all that stuff. And when you're trading at these elevated multiples, earnings growth can't justify it, because now the perception is earnings growth is not going to be there because of tariffs. And so I think that is kind of the pain that we're seeing right now in the markets. And I guess we're gonna have to figure out how it plays out. The other thing here is like, look, if you're a long-term investor, none of this matters, right? Like, for example, I'm long-term on Palantir and Hood. Would I love juice your prices if I get a dip? Of course. Like, there's no desire for me to. I was not selling Palantir at 50, so I'm not gonna be selling it at 30. But I wonder, can we actually get back to 30? Or I'm not Palantir, Hood. Can we get Hood back at 30? I'm not selling Palantir at 85. I'm not going to be selling it at 65. Does it actually get back to 65? And so my gut feeling is no, bro. My gut feeling is like, I think a lot of these names for Hood to go back to 30, Palantir to go back to like 55, 60, we would need to either see a really bad earnings or we would need to see such bad volatility driven by tariffs, which I think we're already seeing a decent amount of it right now in the futures, that it would have to get substantially worse. And a lot of times the beautiful thing about the market is when they price something in, we would have to, my sister just texted me, why am I down $7,000? I should tweet this, bro. My sister, literally, I just got the text, why am I down $7,000? You know, she told me the other day, she was like, I look at my Robinhood every day and I decide that I can do some more Uber Eats. I have enough money. You know, you're doing a good job managing my portfolio. I can order Uber Eats every now and then. And now she's not ordering Uber Eats. No more Uber Eats. Wow, Bitcoin below 95. Down she goes. Down she goes. Dude, we went from 109 to 94 since the inauguration. We went from 102 last night to 94. 102 to 94. Now my sister is going to experience some volatility, bro. She hasn't experienced like the actual pain of the markets. The past year for her has just been up and up and up and up and up. Now she's going to feel a little bit of pain here. She's going to feel a little bit of pain. But anyway, the point is, look, I don't think Trump wants this to continue. I think the worst of it, I don't want to say the worst of it is in, but like a chunk of it that is bad. And the worst of it will be determined by tomorrow's meeting. If that meeting is good, I think this is the worst of it, and I think we slowly recover. If that meeting is not good, and Trump comes out and says the tariffs are still in place, we have no resolution to our negotiation, we're going down further. It's just that simple. Which is why I'd rather sell some positions I don't care about and raise cash than worry about if I am getting out of them a little bit too early, especially if my average is relatively the same price as where the stocks are trading right now. But again, it is a individualistic decision everyone has to make in terms of where they think they can position themselves on these on these different equities. Tesla right here. Let's look at the overnight markets, and then we'll talk about some other stuff we got going on. Bitcoin again, 94.6. Apple still down 2.5. Tesla down 4. SoFi down 6. Nvidia down 5. A lot of these stocks are actually recovering. Nvidia was down 7. SoFi was down 8. SoFi was down 11%. Now it's down 6%. Apple was down 5%. Now it's down 2.5. But Bitcoin is going worse. A lot of these names are like, I don't want to say recovering, but like they're getting some green candles. You're getting some buyers to step in. Bitcoin's getting no one to step in right now. Bitcoin is literally at a low for the past 2 weeks. This is a 2-week low that we're seeing right here on Bitcoin at 94.6. The Bitcoin maxis will once again have to realize that Bitcoin is not a safe haven. Crypto is not a safe haven. The last thing people go to when shit is hitting the fan is Bitcoin. Most people think of it as like that stupid thing they bought that they have to get rid of, right? Especially if you're not like an OG. I mean, I was talking to people today that are OG. I mean, I was talking to some people today that got into Bitcoin in 2010. Like we're talking about OG crypto people. And they said, yeah, they're selling a decent amount of their shit because they just don't want to deal with it anymore. A lot of them, here's what I'll tell you. Some of the OGs that I've talked to since 2010 that have been the Bitcoin since 2010. Here's a couple things they're telling me. Number one, they're telling me they've already think Bitcoin is topped, right? And granted, they're always going to have a significant amount of their position there because if they bought it in 2010 at like $1 or something, you're always going to keep some of it. But a lot of them are saying, okay, so we think the top is in, the short-term top. We think that tariffs create more volatility. Tariffs decrease global liquidity, which we'll talk about in a second. And when you decrease global liquidity, it's not going to be fun for an asset that is tied to liquidity like Bitcoin. And number three, and here's another thing that I think is not going to surprise that many people. The Trump meme coin pissed off a lot of Bitcoin OGs. It really did. My interpretation of it was like, okay, Trump's crypto. First of all, I hated it, but I was like, at least we know he's crypto friendly if the freaking president's launching a meme coin. But I didn't like it. But a lot of the Bitcoin OGs that I've talked about is they despised it because he's basically making a joke of what the point of crypto is to be. Now, granted, that comes down to your subjective interpretation of do you believe in meme coins or not? But this right here, which is down 90 or 80%, the Trump meme coin, the Melania coin's down about 90%. This combined with the tariffs volatility, combined with the fact that 109 feels like a local top to a lot of people, just given it wasn't able to get above that. There were no sort of strategic executive orders on SBRs, Bitcoin reserves, anything like that. This is making people feel like Bitcoin is topped. Now, has Bitcoin topped? I don't know. I'm not as exposed to it in Bitcoin itself. I'm more exposed to it through Robinhood, which is my favorite way to be exposed to Bitcoin. So I'll definitely feel the impact of it if Bitcoin falls pretty badly. Again, no one's bidding up Bitcoin. It keeps falling, 94.3. It was just at 94.5, now barely holding 94.4. But nonetheless, if you're heavy in crypto right now, I mean, MSTR, it's not going to be pretty. Down 10%. There you go. MSTR, $300. $300, $1 away from the 290s. Also, here's another reason. That's a great point. Cheese on top. Thank you for saying that. Another reason I've been hearing from some of the people that have been in Bitcoin for a while that they're feeling uneasy about it is because of gold. Gold is reaching a new all-time high almost every day. It's kind of insane. Gold, I believe, is up 7% for the year, which again, gold's not supposed to move 7% up in a month like that. That's not supposed to happen with gold. But nonetheless, that's what's happening, right? So when you put all those things together, it's one of those things where you can make an argument that, hey, there are some headwinds. And then you got tariffs, which doesn't make anything easier to be able to resolve. And that could lead to some people taking some profits and keeping their money on the sidelines, along with the US dollar, which, where is it at right now? 109.53. Green on the dollar. Okay, so let's talk about position portfolio sizing and sort of thoughts on how Adam, bro. Speaking of making portfolio moves, which let's get into and let's talk about some philosophies around that. Adam called me on Thursday. Was it Thursday? Yeah, it was Thursday. And you know what was funny, Adam? I didn't even tell you the story, but I'll say it right now. I went to go get something after the market opened, and I went in my Tesla, and the police, by the time I was reversing from the place to go back home, blocked off like 5 different roads for me to get home. And like, I didn't know how to get home, and I went like 3 different directions. I couldn't go home. Then I see Adam's calling me. I stop at a Wawa. I sit in the parking lot, and I just get on the phone with Adam because I can't talk to him and try to multitask how to get home. And then finally, after I get off the phone with him, it takes me another 20 minutes. I almost missed the market close, bro, to figure out how do I get home. Like, they blocked off every street. It was ridiculous. But nonetheless, the point is, while I was sitting at Wawa in the car with Adam, he was saying, hey, I've got some money in MicroStrategy. I've got some big money in MicroStrategy. Let's just say it's a little bit more than a couple $100,000. It's a bit more than that. And so the question was, do I get out of it, or do I, what do I do? And Adam already has been feeling this idea of just like sailors constantly hitting the ATM. He's not raising money with a 0% coupon, which when he was doing with that, it was like, oh my God, financial engineering. He has all these people willing to buy these bonds. It's like, so he's a genius. Now he's just straight up diluting MicroStrategy shareholders to raise money to buy his precious Bitcoin, which he's been buying well above 100,000, and MSTR right here below 300. And so Adam already had a hunch that this shit was getting ready to hit the fan. And so, I mean, I didn't really help you that much with the decision, Adam. I just told you, like, hey, now that you've got money, protect it, right? That's the philosophy. Now that you did really well in 2024, protect it. And boy, did he protect it. He pretty much liquidated all of his MSTR, put it into some safe shit, some dividend shit on Friday or Thursday. That's a hell of a trade. Hell of a trade. Oh, it was MSTX. I didn't even know that. So it was 2x leveraged. I don't even want to look at MSTX right now, dude. MSTX is down. Does it trade overnight? Does it trade on Robinhood? It has to be down 20% because it's 2x leverage against MSTR. Yeah, it's down 20%, 19.6%. There you go. So, okay, so that starts off this discussion. So I want to pose it to the chat. Bitcoin's at 93. Holy crap, dude. Goodness freaking gracious. I mean, it's not going to be pretty for Bitcoin proxies. And Hood is a Bitcoin proxy, but it's just not as deep as a Bitcoin proxy as Coinbase or CleanSpark or MicroStrategy, which is why I love having exposure to Hood. So tomorrow is going to be a little ugly unless we get a bit of a rebound here going into the Monday market open. But still, right now it is a bit ugly. S&P 500 is stabilizing a bit, down 1.6%. It was down almost 2%. SMCI down 7%. ExxonMobil down 0.5%. Amazon still down 2.4%. Okay, so here's the question to everybody. How are you thinking of positioning your portfolio? We'll talk more about tariffs in a bit. I think we went through the gist of like why Trump wants to do tariffs. What does it mean for Canada's exports and imports as a percentage of GDP? But now here's the question to everybody. How are you going to position your portfolio to handle this? If you're a long only and you kind of don't care, is it just another day where you don't open your brokerage and you DCA like normal? If you are in some short-term plays, for example, you have some puts open on a certain stock, like how are you thinking of navigating it? I have some strategies that I'm going to talk about in a second, but I'm very curious. Are you raising cash? Are you buying the dip? Have you been waiting for, Robinhood under $50 and are you buying? Are you waiting? Or you want to sell more puts at $40 now that the put premiums are going to be up tomorrow? Like, what is your philosophy here? Are you finally getting into NVIDIA? If you've been waiting patiently, maybe NVIDIA goes to 112 tomorrow. What exactly is the philosophy that some of you guys are thinking on portfolio positioning? We got Jack all in NVIDIA. Okay, that's one way to do it. We got Margaret saying stop losses on all positions. I think that's a very fair point. And the reason I'm asking everybody here is because I want to read some comments and then kind of see if everyone else can take away strategies from other people as well. I don't think stop losses on some of these positions are bad, especially if your stop losses are relatively conservative and you just don't feel like you care about the position. Now, again, let me say this before we keep getting into it. I'm not selling Palantir or Hood because I've been in those names for years now and I have very good averages and I want more of those names. But if I have something that I don't care about, like a Google, I'm out, right? I don't need to sit around and wait because the number one goal is to protect the money, even if you sell it and it goes up a couple bucks and then you buy it a couple bucks higher. Like if your average on Google is not 130 or 150 or 160 or even 180, if it's freaking 195, 197, 200, I think, and you don't have a big position, you get out. Same thing with Palantir. If your average is 82 on Palantir, I mean, if I had an $82 average on Palantir, I'd get the hell out before earnings. I'm not holding that until earnings. But if I have a $20 average, I'm like, all right, I'm relatively stoic about it. It's like, okay, if it falls, it falls. If it goes up, it goes up. So I think that is an underlying philosophy, at least I have. Get rid of the junk in your portfolio. The junk is not junk companies. Google's not a junk company. But if it's not a position that's heavily built out, it's junk, right? It's just sitting there, right? And if it's not a position you really want to build out, it's junk. It's just sitting there. And so I think to prime class the portfolio during times of uncertainty, just to make sure you protect against some of that money getting hit, you get rid of some of that junk. Zokol says buying more NVIDIA, buying more Google spreads. I have protected puts on Palantir, going to sell those and buy more of the above. See, well, that's a great idea. Palantir opens down 5% tomorrow. Those puts go up. You can take some of the put profits and then obviously go deeper into other positions that you are heavily concentrated in, like Google and NVIDIA. John says DCA into quality-wide companies, founder-led companies. Fernando says I'm saving cash until the end of February to buy more. I think being in cash is not a bad issue at all. Travis, all in NVDL. NVDL is going to be down like 15% tomorrow, so that's going to be intense. Sam says, bro, I'm getting effed on the 2x crypto ETFs. Is it just me? It's definitely not just you. BitX, which is probably the ETF you're talking about, I imagine, has, I'll tell you right now, I believe over 2 billion in AUM. It's down 16%, by the way, right now. This is the thing about leverage, bro. Someone asked me on Monday when NVIDIA was falling, and I bought the NVIDIA dip, I think at 120. Someone's like, why don't you buy NVDL? It's for this reason. Because when shit's hitting the fan already, you either run into the volatility or you kind of run into it, but with a little bit of safety. And running into it is NVDL. Running into it with a little bit of safety is like just buying the underlying and then DCAing. But the leverage ones get hit really badly as well. Yeah, 3.42 billion AUM on BitX. So you're not the only one if you're down on a leveraged crypto ETF. There's $3 billion worth of it that's getting hit right now. So a lot of people are definitely going to be getting hit on it. Trader says I am adding more Hood. Chris says I'm swinging puts. Sasha just buying dips. Matt says I'm trying to sell $10,000 more so I can have 20,000 ready for Palantir if it dips. Well, that's literally what I just did. I sold 50 shares of Google, raised 10 grand. And now that 10 grand, if Palantir drops to 65, I would be much more comfortable with buying 100 shares of Palantir for 6,500 versus not having that extra 10 grand to put into something like a Palantir and having it just sit on the side and 50 shares of Google, which is not even a concentrated position, right? Like that's kind of how I'm thinking of playing a little bit of this volatility. Jet says he's 50% cash. That said, we could be going red, NVIDIA to 95, QQQ to 485, then I'll buy. Okay, so you're looking for, what's NVIDIA to 95 from here? Let's just say NVIDIA is 115. That's, that would be basically another 20% decline, 17% decline. So you're looking for another 20% down to get more excited about this. 100% money market funds. I think we're going to get some inflows. We're going to get some inflows this year or this week on money markets. Is Bitcoin below 93? No way. It touched 92.7. Holy crap. It bounced really quick off 92.7. back to 93.8, but it did touch. My average on NVIDIA is 125. No, I think it's a little bit more than that. My average is 125.78. So I have 455 shares. I am down a cool $6,000, down 10% on the NVIDIA position. Now, here's one thing I'm thinking of doing. So I have puts at 110. I would rather roll those puts into a later time frame, and if I can add some more time to it, maybe a couple months, I can decrease the collateral I'm using on those puts. So I have $110 puts, which means I'm using $10,100 of collateral. Because the NVIDIA options market is so juicy, I can roll that back down to like 95 for a net credit, and be able to get some collateral back, which is some buying power for me, and be able to pick some premium up along the way, and be able to extend the amount of time the contract has for NVIDIA to get above $95 or $100 or whatever strike I pick. So that's another way to navigate some of this volatility. If you have some sold puts, you can add extrinsic value to the contract, aka time value, roll those puts, give the underlying more time to be able to develop a base, and then further go from there. Or you could just be assigned on it, right? Because the reason you sold those puts in the first place is because you theoretically were okay with being assigned at those prices. So I think both of those are relatively decent strategies you can do as well. I will buy more Doge if it hits 21 cents. Where's Dogecoin? Dogecoin's got to be getting wrecked, dude. Dogecoin, wow, 23 cents. It's down 22% today. I did not look at Doge all day. 22%. That's aggressive. That is aggressive. What else do we see? 1.5 billion crypto leverage liquidations in the past 24 hours, according to CoinGlass. I did see that headline. So there have been people that are very leveraged in the crypto market. I mean, dude, there are crypto financial instruments that can leverage you 100x. I've never used one of those, but I mean, I've seen them and I've seen what the products look like. And it's just insane that some people like pick up those products, but that's how you can get $1 billion of leverage to immediately disappear overnight. XRP also tanked. Where's XRP? I didn't look at that one either. XRP, 25%. Wow, dude. That's nasty. XRP was at 330 the other day. Okay, so in the poll in the chat, 54% of you say no, it's not good for Trump to put these tariffs on. 46% of you say yes. Here's another question, given we're seeing some of the crypto coins collapse in front of us. Have we topped? That's the question. Let's see what people are saying there. Have we topped in stocks and crypto? Have we topped? Have we topped? Do you think 6,000 on the S&P and 109,000 in Bitcoin was the top for this year? It's not an easy question. It's not an easy question, even if your bias may be one way or the other. But nonetheless, it is a question that I think a lot of people are going to be asking themselves. And the reason I'm asking this question is because, okay, first of all, let me give my answer. I don't think we topped. I think earnings growth is going to be good. I think inflation is going to come down. The tariff situation, we'll see whatever the hell happens with that. But I don't think we've topped. Tesla right here at 384. However, if there was any year where there would be signs to topping, the president launched the meme coin, right? Like, and there's a lot of other examples that anyone could bring up about, like, well, it feels kind of toppy. The fact that fart coin, which let's check on that, that's only down 12%. It's only down 12% today. The fact that fart coin is still a thing, right? There's still a $613 million market cap. $615 million that could be in NVIDIA, Tesla, Amazon, Bitcoin, Google, Verizon, AT&T, the S&P 500. $615 million is in Fartcoin. I mean, look, that could be an argument for why it's toppy, even if we're not topping right now. So I think it's something the market's going to have to figure out. Let's check on our quantum names. I don't know how many of them trade overnight. Let's see how they're doing. IONQ is down 7%. D-Wave doesn't trade overnight. So it's only IONQ. The other ones don't trade. That one is down 7%. So the other quantum names are probably going to get hit. Some of our spec portfolio, most of it's red overnight. MicroStrategy down 11.5%. AMC is down 3%. GameStop's down 7%. Oklo down 10%. No earnings on this bad boy, but they are a nuclear play for AI, if you believe in them. They're down 10% right here. SoundHound doesn't trade overnight. Archer's down 10.5%. Big Bear doesn't trade overnight. And then Faraday Futures down about 2.2% as well. We got some red. We got some red. Davis says, I'm listening to you from the massage room at the gym. I hope my voice is a bit massaging in the face of all this red. Now, granted, Davis, I think you have some covered calls on Palantir, so I don't I don't think you're that afraid of the red. Dude, if you have deep in the money covered calls right now, I think you're like silently just like, well, maybe tariffs aren't the worst thing in the world, especially if you want to get out of them. So Palantir right here, down 5% in the overnight markets. Oh boy, oh boy, oh boy, oh boy, oh boy. Ethereum's getting nuked as well. Ethereum is, wow, Ethereum's down 20%. Holy crap. Bitcoin's not down that bad. Bitcoin is down 6.6, which is, you know, it's volatile, but it's not 20% volatile. It's not double digits down. Goodness gracious. That is aggressive. Palantir is holding up pretty well, to be honest. Only down 5% is not that crazy. I'm using Robinhood and Webull to see overnight. For those that don't have Robinhood, just download Webull. You can download it from anywhere in the world. And as you can see right here, you can see the overnight trading on any stock if it's available. So Webull's free. You can download it and should easily give you the access to it. Vertiv's down 8%. That's another data center play. TSM's down 3%. Vistra's down 7%. Let me look at the semis. Microsoft, by the way, is down another 1.7. Microsoft had their worst day since 2022 back on Wednesday. So Microsoft's been not having the best week. Semis are all down. Yeah, all of them. NVIDIA 6, AMD 3, SMCI 5, Intel 3, ASML down 5, Broadcom down 5, Qualcomm down 2, TSM down 3, Marvell down 5, Lam Research down 5, Dell down 3, Micron down 4.6%. Everything is getting hit. Ronnie says, I'm down $35,000. Well, Ronnie, to make you feel better, no, I can't make you feel better. I'm down 23,000 right now. But you're doing a little worse than me right now, but everyone's red. Everyone's red. Now, granted, as red as people are, again, 2024 was a good year. So, you know, I think hopefully we get through February by just giving back January's gains. That's it. That would be more than, I mean, I'd take that. If we just have to give back okay, you could have your January gains back. That's okay. But don't give me losses that make January like not only disappear, but fall off a cliff. And so my year-to-date portfolio returns for January, I said this, I put this out on Friday, was 18.03%. It was a great January. Biggest winners were Palantir, Hood, Reddit, SoFi, Google. Biggest losers, obviously, NVIDIA. And the stocks that were flat for me were Grab, Amazon, Snapchat, Rocket Lab, Tesla. All of those are probably going to be down a lot more tomorrow morning. The income from selling options this month was $20,000. Majority of that came from Robinhood. I had a $15,000 profit on a cash secured put, and then I had extra $5,000 coming from SoFi, Reddit, and Tesla. So it was a good month. January was a relatively good month, and the overall performance year to date from January 1st to the 31st was 18%. If I have to give that 18% back for February, I am more than happy with doing that. But I just don't want to be down 36% going into February because you gave back the 18, down another 18. Like, so if that's the extent of the pain, which means the S&P 500 would go back to 5,700 roundabout, basically 5,800. But if the S&P 500 goes to 5,500, then it's like everything's hit. Everything's hit. So we're going to have to see. Davis says, would you add to Leap's tomorrow mid? Trump is going to have talks with Canada. Mexico already seems like this will be a short-lived dip. So that is what I'm feeling. I'm not adding to anything tomorrow unless it gets stupid, because I think there is a little bit of a wait and see that has to be done here. But there is 20% of me that feels that this is going to be short-lived and that Trump's going to be able to resolve this pretty quick with Canada, given their meeting tomorrow. And if that's the case, then this is going to be a fun little experience, for lack of a better word, that all of us had, but we can move on from it. But what if he doesn't, right? Then buying Leaps tomorrow are going to get destroyed. And so it's one of those things of just like, how well is your risk tolerance to navigate it? It's not August 5th where everything was down so bad. Like, again, this is what I'm saying. We're down 3% right now. Okay, whatever. August 5th, the VIX was up 600%. Like, that was like, you just buy the dip and you shut up because you know this is stupid, right? This is so much panic, you get into it. There's not really panic. I mean, Hood down 8%. Is that annoying? Yeah, but Hood is up 35% for the year. Did I expect it to come back down? Of course. Like it would be nice for it to hold 50, but it's not like I think it's insane that it's giving back 8% after being up 35%. HIMS was up 40% year to date on January 31st. It's down 8%. Is that big of a deal? Not really. Now, NVIDIA is the one that continues to fall, and that one sucks. But a lot of these names that have had some good Januaries giving back some of the action is not the worst thing in the world. But that doesn't mean I think you buy the dip. Like Meta, do you buy leaps on Meta now that it's at 670, even though it's not 716? I don't know, right? Because Meta's up a lot already. And one could argue that Meta's Q1 guidance was not the best, and maybe they take a little bit of a breather as these tariffs continue to evolve, and you can get leaps at a cheaper price. But it really depends on what the resolution is going to be from that meeting tomorrow. Also, Jojo, good point. We got EU tariffs coming up, folks. Like, that's not resolved. Trump said definitively that the EU, he absolutely believes, will have to face tariffs. He said that on Friday in their press conference. These were the specifics of what he said. So, I mean, we still have more tariffs coming up, which makes it harder to be so excited to buy the dip. So he said these 5 things. Absolutely will put tariffs on the EU, and they will be quote unquote substantial. He says he's aiming for tariffs on oil and gas by February 18th, which is a whole nother kerfuffle we have to deal with. Oil, by the way, is up 2% right now. Let me show you guys this. Oil is up. Oil futures are up 2%, 73.82. Again, that's not the best in the world. We definitely don't want to see that going up to 80. But that's another thing we have to deal with on February 18th to see if oil and gas tariffs officially go live. Then he has tariffs on steel that Trump is thinking are in discussion. And then he said, eventually we will have tariffs on chips. And the final thing he said in that press conference on Friday at the Oval Office is he's not concerned with the market reaction to tariffs. He explicitly said he's not concerned about the market reaction to tariffs. He doubled down on that today when he said we're going to have some short-term pain, but long-term we're getting ripped off and we need to be able to do this. And so it's kind of Trump saying, look, I like the stock market, but I love not getting ripped off more. And eventually we need to resolve this. And if we go through some pain in the meantime, then so be it. That's what we have to do. Sachin says, Amit, the yen carry trade was pulling the rug out of your feet as it triggered a rebalancing mechanism before you know it. The time is gun to a head, but pulling the trigger is optional, so it's a fear trade. I agree with that. So essentially what I'm getting from what Sachin's saying right there is this idea of when the rug is pulled out under your feet already, you have nowhere to hide, right? That yen carry trade happened. No one expected Japan to raise rates. They raised rates, and then boom, the trade unwinded, and then you felt the pain of it, and then you moved on and you priced it in. This is one of those things where it's fear, it's uncertainty, it's we don't know what the hell he's going to tweet tomorrow. We don't know what he's going to say about the EU. We don't know if Canada's actually gonna resolve this by Monday morning when they talk to Trump. And so that fear and that uncertainty, it's harder to buy the dip when the worst of it, you don't know if the worst of it has already happened. Whereas on the yen carry trade, I mean, like Robinhood went from like 25 to 13. I mean, and Robinhood at 13 is different from Robinhood even at 47, right? Like, so valuations got so compressed because of a VIX going up 600% in a day. You can make a logical argument that, okay, this is probably not going to cause a catastrophic, prolonged recession. But tariffs are different because it's creating fear that no one has an understanding on in terms of what it means for GDP impacts. McAdams' Adam family, this is a good point as well. Mass deportation theoretically could be bad for GDP. The California wildfires, we haven't seen the impact of that on GDP with insurance premiums rising. I mean, there's a lot of different headwinds that everyone has to reconcile with. And even in those headwinds, I think that's a buy the dip. I think you always buy those dips, but that doesn't mean those dips get resolved within 5 hours like we saw on August 5th. So I guess we're going to see how this ends up playing out. Solana is at a great price right now. Solana was at 210 last time I checked it. Solana is at, oh my gosh. It was at 210 in the morning. I have not looked at it since. It's at 184. This thing was at $300 the day Trump launched the meme coin. I mean, again, it's a lot of people got excited about some of the upside momentum in a bunch of different frothy areas, and now that's going away. Crypto is not the safe haven. Neither is Tesla, neither is Google, neither is Amazon. I don't think any of these are safe haven. They're as safe as you want them to be in the context of your portfolio, but it's not like you run away from the volatility being in these. I mean, even bonds and money market. I mean, I guess cash on the sidelines is the only thing that's safe because you have zero volatility you're dealing with. But besides that, everywhere you look, it's bad. Wow, Bitcoin 92. It hit 92.54. So Bitcoin was ready. It was $54 away from falling below 92 today. Wow, XRP 190. There you go, below $2. Below $2 on XRP. Tesla is at 385, I believe. Tesla right here, 383 currently right now. Well, it is what it is. It is what it is. This is what we have to deal with when it comes to Trump being in office. I mean, look, we had a hell of a run since November 5th, so it's been a great run in a lot of names, but at the end of the day, he told us he was going to do this. I definitely didn't believe he was going to do this. He made sure to do this, and now we all have to figure out what the implications of this are going to be over the next coming days. Such and says stop loss, VIX, and margin positions are to be hit badly at market open. It's been a while since we've seen an index trigger for breakers. Yeah, I mean, if this continues and there's no resolution to the claim to the meeting tomorrow that Trump's having with Canada, there's going to be some margin calls. There's absolutely going to be some margin calls. And the way I say that with a lot of confidence is IBKR had their highest margin balances ever in the history of being a company. That was announced last week on their earnings, which is actually really good for Robinhood because that means there's going to be more margin interest. Nonetheless, if IBKR is having their highest margin balances ever, so is probably Robinhood. So is probably Schwab and Fidelity to an extent. So every brokerage tomorrow is going to try to make sure what stocks are you heavily concentrated in and what's the maintenance. If you're in MicroStrategy, the maintenance is 100%, which means if you have 200 grand in MicroStrategy, you better have 200 grand to cover the 200 grand that you have in MicroStrategy. Whereas Apple is a maintenance of 25%. So, it's one of those stocks that is relatively safe in the broader market. But if you're heavy in some of these spec names and they're down substantially, if you have an average of, I don't know, $30 on MicroStrategy, you're fine. If you have an average of 350 and this thing opens up at 250 tomorrow, there will be some calls coming in from margin. And so that could create even more of a sell-off. Tesla right here, 382 down 5.39%, because obviously people have to sell then to cover their margin. And MicroStrategy 11.5%. Wow, Bitcoin 91. There you go. There she goes, 91.9. She hit 91.3. Unbelievable, dude. 7,500 down on Bitcoin. MicroStrategy, I don't want to look at that shit tomorrow. That's going to be ugly. Unless we get a bottom on Bitcoin soon and we start to resolve. But even if we get a bottom soon, I mean, it's not like MSTR gets scot-free from there. Down 11%. Where's Coinbase? Coinbase down 10%. Hood down 8%. I think Hood could fall back to 43, 44. I think that's very reasonable to see. It's at 47 right now. The Bitcoin miners are also probably going to get a little bit of pain. Nice little rebound on Bitcoin, 91.3 to 92.8. Very small rebound, but we do have a rebound. Now we got to see if this can hold as well. Such and says, good or bad, whatever has to happen in markets due to this will happen fast and most likely in 1 to 3 days. Markets max pain. Markets now are very accentuated than ever before, and 2 to months happen in 3 days. I do agree with that. A lot of the action you would think to last in a couple of days, given the hyper focus on the news cycle, given the amount of options and volatility, which, by the way, here's a stat on options that I think a lot of people will find interesting. All of that makes market movements exacerbate way quicker than what they took previously in the past. And a lot of that also has to do with the fact that retail is in the market. I mean, the fact that retail bought $500 million of the NVIDIA dip the day that it fell 16% on Monday, I was part of that, just shows you how willing people are to jump in and also how quickly people are to sell off their stocks now that NVIDIA is down 5%. You can see a lot of movement within just a couple of days, within just a couple hours. Here's a stat on options. US 60-day average options volume, so options that have a 2-month long expiration, has surpassed 53,000 contracts traded per day for the first time in history. Options volume is up to 10,000 contracts per day in less than a year as the appetite for trading has skyrocketed. Since the beginning of 2023, options volume has almost tripled. On Wednesday, 0-day expiring options reflected a record 63% of the S&P 500 options volume, meaning you buy it Wednesday morning and it expires Wednesday afternoon, posting a second record in 1 month. AKA risk appetite is very, very high. So, I mean, we're going to see tomorrow if that risk appetite can continue, or do people end up selling those calls, getting out of the market, taking the loss, or doubling down. I mean, tomorrow's going to be very telling to see how this ends up playing out. MicroStrategy right here down 11%, Palantir down 5%. And then SoFi is down 7% as well, 1468 on SoFi. Did anyone buy the dip yet? Did anyone buy the dip on Webull or Robinhood overnight? Did anyone at all take a little gander and buy the dip? My cousin just texted me. She's like, "Oh my gosh, what's happening?" My sister and my cousin, bro. As soon as they see some red, they're like, "We got to text them it. What the hell is happening right now?" Chris CRM says, "I just bought a few NVIDIA." Jonathan bought NVIDIA at 113. Josh bought some Bitcoin. Buying NVIDIA, CRISPR at 39.20. Interesting, CRISPR. Okay. Is that one down badly? CRSP. Does that trade overnight? Wow, it's down 6%. Yeah, there you go. So genomics is getting hit as well. Everywhere. Bitcoin back to 94. All right, seeing a little bit of recovery here on Bitcoin. Little bit of recovery. What percentage cash am I in? Yeah, everyone put in the chat what percentage cash they're in after today. What percentage am I in? This would be, let's see, about 4%. About 4%. I think on Friday it was like basically 2%, something like that. So I was 30% in January, but then began deploying a bit more strongly here. So not a substantial cash position, but enough where if there's any juicy dips, I will be excited to take advantage of them. We got Lee's at 1.5%. We got Eric's at 3%. Andrea's at 95%. David's at 50%. Felix is at 20%. John's at 10%. Blake's, is this negative 20, Blake? My man is on margin, bro. Benjamin's at 50%. Brian's at 4%. Yeah, I'm seeing the average in the chat basically at around 10 to 15%. That'd be the average. Some people a little bit higher, some people a bit below 10%. Look, that's reasonable. If we get a nasty, again, like, do I think SoFi deserves to be at 14? No, not at all. I mean, I don't think it deserves to be there. So I think at some point prices get stupid, right? And when prices get stupid, that's when people get excited. And that's where cash starts getting deployed. NVIDIA at 112, do I think it deserves to be there? No, I think this is really stupid, but we might have stronger exports on chips, and that could, or export controls on chips, and that could be bearish for NVIDIA. So although I don't think that has to happen, I could see some broader arguments happening that end up hurting NVIDIA even more. Here's a stat as well that's not good for NVIDIA's relationship with Mexico. So Foxconn in November 2024 revealed their world largest NVIDIA Blackwell facility in Mexico to meet the demand for Blackwell. This will now face a 25% tariff. So Foxconn's production warehouse inside of Mexico, which is their facility to create the NVIDIA GB200 Blackwell chip, is now going to have a 25% tariff. About 70% of servers currently shipped to the US by Winstron Group also come from the Mexico factory. So this right here is a very obvious way to imagine that NVIDIA takes a headwind if their suppliers have to pay a 25% tariff. Does NVIDIA put that cost onto the hyperscalers? Do the hyperscalers put that cost onto the startups that are buying compute from them? Like, where does this all play out? How does this get resolved? Which is why I think Trump is going to find a deal with Canada and Mexico sooner than not. But obviously nobody knows. Nobody freaking knows. Now, Lunar says right here, that's why Trump did what he did. They're all running to Mexico. That's a good point. That would be Trump's argument. Trump's argument would be like, look, this is the reason why I'm putting on these tariffs, because these facilities should be in the United States and they're in Mexico. The resolution to this is, do they come to the United States or not? Because if they don't come to the United States, and if they have to pay the tariff, who takes that cost? Is it going to be the consumer at the end of the day? Do we have to pay more for AI services because the hyperscalers have to pay more for the compute, which means they're going to charge us more for the services? Like, or are we even going to use the services, which means the hyperscalers are not going to be able to upsell us, which means they're not going to have that much demand, which means they're not going to keep buying the NVIDIA chips? Like, where does this all end up playing out? Because at some level, if we think from first principles, if you tariff a nation and there's objects in that nation or goods in that nation that are more expensive for the person who's selling them or exporting them, that cost ends up coming down in some way. And I think Trump knows that as well. I think his administration knows that as well, but they want to make the pain so bad for them versus us. It's going to be painful for us as well as U.S. citizens, but it's also going to be really painful for them. And if the pain is more for them than it is for us, then it outweighs in terms of the scale of pain, and then maybe you get some capitulation from the other side. Luna says Trump will meet with them, and maybe they will build in the U.S. probably with tax incentives. That would be a big political win. That would be a big freaking political win. If he can get more companies, maybe not to leave Mexico and China, but to say we're going to start building in the US, which is probably the best he's going to get. He's not going to get Apple leaving China. That's not happening, right? But if he can get Apple to commit, or other companies like John Deere, Caterpillar, et cetera, to commit to producing in the United States more than not, that's the best win you could get, because you're probably not going to get their entire supply chains to flip overnight into the United States. Because even with the tax incentives, the cost of labor in China compared to the cost of labor in the United States, where there's a minimum wage that doesn't really exist in China, it is substantially higher. And those costs of goods inevitably end up on the consumer. If it costs a company a lot more to make a t-shirt, they're going to charge more for that t-shirt to try to have some level of profit. So I think we're going to have to see. We're going to have to see how this ultimately ends up playing out over the next couple of days. But again, I do think there's a world. I really do think there is a world where Trump resolves this by tomorrow. I'll probably be wrong. I don't know. I kind of don't think he's going to let tariffs last for this long. By the way, for those that just missed what he said about tariffs, if you're just joining, he did a small little press conference right here. Here's what Trump had to say about the tariffs.
No, I'm not concerned. We may have short-term some little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that. We're going to change it fast. We're going to make America great again. We have to focus on our country. We have tremendous potential if properly used, and we have to focus on our country. Tremendous deficits with China, tremendous deficits with the European Union, tremendous deficits with Mexico and Canada. And why? What's the purpose of that? Why would we have deficits? And you look at, if you look at pharmaceuticals and drugs, if you look at various products, it's much cheaper in other countries. We're not going to allow that much longer. We're not going to take it.
So you got that one clip, and then he talked about Canada and basically why he feels Canada is exploiting the United States in another clip. And he said, I quote, "If they want to play the game, I don't mind. We can play the game all they want." So tomorrow we're going to see if there's a resolution to this game or if this game continues. What is everyone thinking? What is your gut reaction? Oh, what's the poll on the top? Let me see. What's the poll result? 61% said no. 60-40. 60-40 on no, we haven't topped. 39% of you say yes, we have topped. Look, either 2025 is going to be as bullish as it was last year, or we're going to feel some pain. Or it might be one of those years where you feel some pain for the first couple months and then it resolves itself. I don't know. I don't think it's a 2022 type of year. I really don't think tariffs is going to be what the reason that the stock market collapses this year. But in the short term, obviously, it could definitely be a reason. Even if it's not a long-term trend going into the rest of the year. Where is NVIDIA right now? MicroStrategy is down 9.8%. Bitcoin, a little recovery back to 95, 94.8. NVIDIA down 6.2%. So hold on, 6.2%. That equals 150 billion in market cap. So that's another 150 gone on NVIDIA here. XRP, insane candle. Let me check XRP real quick. Yeah, it got a candle from, what was it, below 2 up to 230, 227. Yeah, that's a hell of a candle. XRP went from 197. Let me show you guys this. 197 to 230. And this is why it's hard to be in this. This is what, because like you just don't know, right? This is why DCA is always the only philosophy that really works long term. 196 right here, all the way to 220. All of these things can bounce on any headline that's bullish. All of these things can tank on any headline that's bearish. But again, the bearish headline, TQQQ also down 8%. The bearish headline has happened. It happened on Saturday. Markets took it in. They're taking it in right now. And we've seen the move that we've seen. Now, and this is one thing I love about markets, is that a lot of times they move on quickly. I mean, like the thing about it, dude, the markets move on quicker than you could imagine. They like, all right, they tell me the news. How bad is it? Give me the bad news first, then the good news. We'll move on. Okay, cool. Same thing with earnings, right? Oh, Netflix had 19 million subscribers. Awesome. Up 20%. Oh, 19 million. Well, that's cool, but we're going to sell it down 5%. Okay, now it's only up 15%. All right, well, 19 million was actually good. Let's move it up. All right, back to 20%. Actually, their next quarter's earnings is not going to be 19 million. Let's take it down 10%. Like it's just the nature of markets. That's why the only way to really win is kind of be long term. And if you're decent in derivatives, you can play some of that volatility. But nonetheless, we got the tariffs news. It's in. It's like, all right, how much worse is it going to get? How much worse is it really going to get? And I know it's only the overnight markets and the volume is limited from what we're going to see at 9:30 tomorrow. But how much, like what? Tesla's going back to 300? SoFi's going back to 11? NVIDIA's going to 95? Right? Like where does this stop? How bad do things have to get? And how stupid do prices have to get before people say, screw this, my $7 trillion on the sidelines is not going to be stuck on the sidelines while Robinhood goes back to 35, right? And so I guess over the coming weeks, that's going to be the theme of this first week of February, which, by the way, it's going to be a hell of an earnings week. Let me pull this up right here. And it's going to be a lot of companies. 20% of the S&P 500 companies report this week. And I think that'll determine the trajectory of markets as well. Tomorrow, obviously, we have Super Bowl, Palantir. Then we have PayPal, Spotify, Pfizer, Ferrari, KKR, AMD, Google, Snapchat, Chipotle, Enphase, FICO, UBS, all of this on Tuesday. Wednesday, you have Uber, Disney, Novo Nordisk, Toyota, Qualcomm, ARM, MicroStrategy, Ford, Symbiotic, a lot of that stuff on Wednesday. And then Thursday, you have Roblox, Hershey's, Peloton, Eli Lilly, Hilton Hotels, Amazon, Elf, Cloudflare, Fortinet, Pinterest, Affirm. I mean, it's going to be a big, big, big week for earnings. And I would imagine if earnings can continue the trend that we saw last week, how bad are tariffs going to be to deny some of the earnings growth that we have? Sachin says it stops 10% from here soon, but if it escalates, I will keep even 30% from here. The key wild card is during these times, something else happens outside of the blue that hurts the market even more. It is kind of crazy, right? Imagine the tariffs thing happened at the same time with DeepSeek, right? Like imagine this week or today, right? The tariff news came out and then the DeepSeek stuff didn't happen last week. It happened today. I mean, it would be pretty phenomenal to see both of those things coinciding with each other. But more out of the blue events definitely can happen, even if we've already had a couple out of the blue events. And I think DeepSeek was on its way to being resolved just from like a media perspective. Like the market was getting ready to be like, okay, Javon's paradox, like we get it, blah, blah, blah. We'll move on from this stuff. But now with tariffs, it's like just another headwind on NVIDIA and the rest of the broader market. And it doesn't help. It definitely doesn't help. 30 and a Wake Up says earnings don't matter if the supply system is in flux. That's a fair point because the market cares about future growth and your earnings could be amazing this quarter. But if your supply chain's messed up, your earnings might not be that great next quarter. Oh boy, oh boy, oh boy, oh boy. Look, at the end of the day, I don't know. I don't feel the type of panic that I felt even on August 5th, dude. I felt way more panic on August 5th than I feel today. And maybe because it was in August and you already had such a good year and you wanted to keep those gains alive. And so August 5th was everyone brute forcing a bull market, right? Because like very few people actually sold August 5th and went into cash. I mean, some people did, but the majority of people I talked to, they just went they went in even harder, right? They're like, screw this. We're not letting the bull market end. No way. Maybe in 2025, but not in 2024. And it was like we manifested that bull market. But it was scary. This doesn't feel scary. This just feels annoying. I feel like that's my take. This doesn't feel scary. This feels annoying. And it feels annoying because it has the chance to escalate to something scary. Right now, it's not scary. Like, it's genuinely not scary. It's annoying, but it could be scary. And it could also be a nothing burger. And no one freaking knows. And that's what also makes it more annoying because if there's uncertainties around where this goes, what are you supposed to do? What are you supposed to do? Michelle says it is scary for Canadians. Okay, wait. So for my Canadians in the chat, describe to me how you're feeling right now because of this. Are you afraid that your local car dealership is going to be in a different situation? Are you afraid inflation's going to go up? Are you afraid your job might be at risk? Like, for the Canadians in the chat, let me know how you're feeling, because obviously I don't have the Canadian perspective as an American. I don't think tariffs are good for either country, but I would imagine if you're in Canada and 22% of your exports are to the United States, or 22% of your GDP are exports to the United States, that's not good. That's not good for all that to be tariffed. I'm genuinely scared. American investment and a Canadian job. Just Me says, I think Canadians are pretty pissed. I'm Canadian. We are pissed off, annoyed. I'm getting a lot of pissed offs. Krupa says, screw it. I'm not afraid at all. Canada might be the 51st state tomorrow. Mexico, the 52nd state. Market can moon after Trump meets with them. Oh, my goodness. Oh, my goodness. What's TSM at? TSM is at down 3%, 202. Look, I do think if you are Canadian, it definitely is a little bit more scary than annoying, right? Because you could have legit friends and family that could get laid off or something if this thing gets bad, and no one wants to see anyone lose their job. So it's definitely, it's not a laughing matter if you're in Canada, and it's not a laughing matter at all if you're in the United States either. It's just one of those things where it's like, is he bluffing or is he not? Is Trump like legit going through with this, or is it? Because I think Trudeau will take away the retaliation as quick as he put it on, as long as Trump's cool with ending this, if they can come to an agreement. I really don't know if this is a negotiation tactic. Again, 20% of me feels like it is, or is he dead serious that he wants to have 25% tariffs on everything coming out of Canada? Yeah, here's the other stat. Again, tariffs on Canada are not going to affect the United States as much. That's the difference, right? Canada is 1.5% of our GDP. US is 21% of Canada. So that's another reason why in the United States it doesn't feel as scary. But 21% of GDP is, dude, that's a lot. That's 1/5 of your global. Like, that's not a joke. That is things that can get affected tomorrow if it goes into effect. Trudeau is being praised by Canada's far right. He is uniting Canadians. Oh my gosh, dude. Oh boy. Randy Singh says, Canadian here, but most of my funds are in the US ETFs and stocks, so I'm not afraid. That is fair. I think a lot of Canadians are also heavily invested in the United States. My mom always said, where there is confusion, there is profit. Your mom is a smart woman. Your mom is a smart woman. Where there is confusion, there is indeed profit. I mean, no one ever went broke. I know it's such a cliche, but taking a little bit off the table. Yeah, so this headline is not a new headline, but Evan probably just tweeted this. Trump did say, well, let me just play the clip right here of what Trump was saying about Canada, but they are meeting tomorrow, which again, bro, I just feel like there's a world where there is a resolution announced tomorrow and Trump looks like the good guy, and then all of this is resolved and markets moon. But who freaking knows?
Well, Canada's been very abusive of the United States for many years. They don't allow our banks. Did you know that? Canada does not allow banks to go in. If you think about it, that's pretty amazing. If we have a U.S. bank, they don't allow them to go in. Canada's been very tough on oil, on energy. They don't allow our farm products in, essentially. They don't allow a lot of things in, and we allow everything to come in. It's been a one-way street. We subsidize Canada by the tune of about $200 billion a year. And for what? What do we get out of it? We don't get anything out of it. I love the people of Canada. I disagree with the leadership of Canada. And something's going to happen there. But if they want to play the game, I don't mind. We can play the game all they want. Mexico, we've had very good talks with them. And this is retaliatory. This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada. And we're not going to allow that. And by the way, we have among the lowest numbers we've ever had of people crossing our border. The lowest numbers since my administration.
This is what Trump said on Friday about tariffs not causing inflation.
The European Union has treated us so terribly.
You promised Americans to try to reduce costs, and so many of the products that would be tariffed when they come into the country, the outgoing country is not paying the tariff. The buyers in the United States pay that, and then that's passed on to consumers in most instances.
Sometimes.
How would you expect to have prices come down if you have such a broad plan for tariffs? And what do you say to the voters who want to see you reduce everyday costs?
Well, let me just tell you that I got elected for a lot of reasons. Number one was the border. Number two was inflation, because I had almost no inflation. And yet I charged hundreds of billions of dollars of tariffs to countries. And think of it, I had almost no inflation and I took in $600 billion of money from other countries. And tariffs don't cause inflation, they cause success. Cause big success. So we're going to have great success. There could be some temporary short-term disruption, and people will understand that. I had that when I negotiated some of the good deals for the farmers. And unfortunately, those deals have been led astray by Biden and his people because they didn't enforce the deals.
So that's Trump's argument. That is Trump's argument on how this is playing out. Farza said, admit there's a Chrome plugin for volume you can use to boost audio in the browser. It works really well, called Volume Booster. Thank you for that, Farzad. I'm going to download that right now because it does get very annoying when I play a video and the audio sucks. Yeah, I see it right here. Wow, 2 million users. Okay, this looks like I'm adding that to Chrome right now. There you go. Cool, awesome. Thank you for that. Hopefully that will help with some of the audio that ends up getting hit. But for those that did hear what he said, again, his argument there was that tariffs are not inflationary. They are necessary for resolving some of the issues that we've had with Mexico and Canada. And I mean, look, ultimately, we're going to find out. By the way, the Trump meme coin is getting decimated right now. It was just at 20. Now it's at 1754. So this thing, you see that red candle all the way at the end? That one's getting hit even worse than what it was 20 minutes ago. And we're red. We are red on the day. Farzad, thanks for that. I'll be adding that tomorrow because that happens like pretty much every day, dude. We play a video and then the audio sucks. So that's something that'll definitely be helpful. Rango says I bought some Solana. Dude, people are either retail is going to be right or retail is going to be fucking dumb, but people are buying the dip. They are buying the dip. Again, to me, when it comes to buying this dip, is this a buy the dip? Of course it's a buy the dip. It's always a buy the dip. It's just a question of, can you get a really good deal? And if there's no resolution tomorrow morning after the conversation, you're going to get an even better deal than you're getting today on a lot of these assets, right? Inverse ETFs will be up heavily tomorrow. That is correct. You got your short QQQs. Do any of those trade overnight? Let's see. MSTZ is definitely going to be up tomorrow. MSTZ, yeah, it doesn't trade overnight, but this thing is short MicroStrategy. Short QQQ, that's a popular one. That's up 8% overnight. What are some other ones? But Tesla Q, right? TSLQ, yeah, that one's up 10% overnight. So a lot of these are going to get some volume coming in tomorrow. Granted, they've performed very bad over the past 2 years, but strategically, as a hedge, if you had any of them going into today, they probably will do a little bit better tomorrow. Bitcoin right here, 93,500 right now. Imagine there's a huge market-wide dip and you take your cash and buy a meme coin, not Tesla, Nvidia, Palantir, Microsoft, Meta. I agree, dude. I agree. It is pretty damn insane that people choose to go that route. But nonetheless, that is the nature of the froth that we're having right now in the market. That is the nature of the froth that we are having right now in the market. Okay, so let's do a couple things. Let's do a couple things and then we'll end out the show right here. First of all, thank you everybody for joining me on a Sunday night to try to cover what's going on. My takeaway here, I don't think this is a time to panic. I do think this is a time to strategically raise cash, get rid of some of the junk in your portfolio and just have it on the sidelines, because even if you're wrong and this is resolved tomorrow, at least you have some money to deploy in the future. And maybe you have to pay some higher prices. Oh, well, at least you have more peace and sanity than bag holding, because this trade war ends up lasting much longer than we think. But I don't think it's a panic. I don't think it's get out of your positions if you're super, super deeply, deeply heavy inside of a freaking Palantir or a hood like I am. Like it's not, there's not even for a second I think, oh, I have to sell those, you know? But for the stuff that's just junk, it's like, all right, I can get rid of that and I can buy more Palantir and hood. But you need to have cash to be able to buy that stuff, right? And unless you have unlimited cash, there has to be a trade-off in your portfolio, which means getting rid of some stuff and keeping the other stuff. So let's do this right here. Let's do this. And by the way, I'm not selling my NVIDIA for everyone asking. I'm in NVIDIA. The more research I do, the more I think this is a stupid dip. Could tariffs affect them? Of course. Could this thing go back to 100? Of course. But I'm holding on to my NVIDIA, and I would be looking to buy if it gets back down to 100. Because I think long-term, if you believe in the AI infrastructure trade, which is if you believe in AGI, you believe in CapEx that's needed to get to AI or to get to AGI, then you believe in NVIDIA. It's just that simple. That's the conclusion I've come to. And right now, it's going to sound really smart to be articulating the bear thesis, especially as NVIDIA is down. You're going to get a lot of bears coming out. Someone's going to be right. And I just think the bear is going to be wrong. And maybe I'll be wrong. But in a year, we will know who's right or wrong. But I'm not going to sell NVIDIA after it's down 20% because it's down another 5%. Like that to me is just not really logical right here. 109.69 on the dollar. That one right here is up 1.22%. I am holding on to SMCI. I would love to get rid of it if they could tell us when their earnings are, because no one freaking knows yet. I think it's February 4th, but they haven't made the announcement. So I would like to find out when that's happening. And then we'll take some of that money and buy more NVIDIA with SMCI. Okay, so here's two things I want to do. There's two things I want to do. First of all, I want to make a tweet in front of all you guys, and you can help me make the tweet. And then number two, I want to watch a 14-minute video from CNBC that came out yesterday. It's number 9 trending on YouTube. I saw the title. I haven't watched it yet. Some of you guys might have seen it. You might have not. And it's called How Companies Are Dodging Trump Tariffs on Canada, Mexico, and China. Already has 2.7 million views. I think it's probably going to be a really good video. This is not on CNBC television. This is like CNBC, the actual production house. They actually make some really good videos when it comes to deep dives on this. So I think all of us should watch this together to get a little bit of a deeper understanding of what companies are doing to navigate the tariff situation. And then we will keep going from there and end out the stream. But before we do that, we'll talk about Palantir earnings. So we're going to make this tweet. We'll talk about Palantir, even though we talked a lot on Palantir Weekly. I'm going to spend 10 minutes, give my final thoughts on Palantir going into Monday, and then we'll watch that video. Having said that, let's make this tweet. So usually when the markets are acting like this, I put out a tweet where I put out all the important tickers and the current prices that those tickers are at. So let's do that right now. First, I have to add a picture. Where's the website I was looking at right here? Let's add that here. And then we will put in these ticker symbols. Okay, let me put the tickers first and I'll get the picture. So here are the tickers I usually do. We're obviously going to start with Palantir and Hood. Those are my babies. I got to start with Palantir and Hood. We got to do that. Farzad says, get some good sleep tonight. Admit tomorrow's going to be crazy. Yes, tomorrow is going to be crazy, and the show tomorrow is going to be crazy as well in the morning. All right, so we got Palantir, we got Hood, we have Tessie. Let me know any tickers that you think I'm missing. Tesla, we have MSTR, we have NVIDIA, we have SoFi, we have, let's do AMD, we have Apple, we have Google. What's some other good ones? Meta, Amazon. Yes, we're not going to do Grindr. Someone asked me, I said on Saturday, I'm going to be publishing a thesis on a stock, and it's going to be coming out soon. And someone was like, is it Grindr? And I'm like, no, it's not Grindr, but the thesis on that is rock hard. So the thesis on that is solid. Grab doesn't trade overnight, so I don't have Grab's price, but Grab's probably opening at like 420 tomorrow. Grab's going to be ugly tomorrow. It's going to be ugly. Rocket Lab doesn't trade overnight either. TSM. We're going to do it up until it fills on the Twitter thing. So we're not going to do literally every ticker, but we're going to do a bunch of them. We have AMD. Oh, HIMS. That's a good one. Let's do HIMS. Coin. We should do the S&P, the NASDAQ. I can't even see any more from this. It got so big I can't even see. That's weird. It usually doesn't do. Oh, there it is. There it is. There you go. SP, QQQ, and IWM. All right. So actually, you know what? This is dumb. Why don't I do this while the video is playing? That makes more sense. I don't need to do that in front of you guys just to literally type in the percentage changes. So here's what we'll do. Let's talk about Palantir. Then I'll make the tweet while the video is playing. That makes a lot more sense versus doing that in front of you. But the reason I wanted to do it in front of you guys was because I was just going to read out what these tickers are trading at, but we already did that for like the past 20 minutes. So everyone already knows where these prices are at. And they're recovering a little bit. SoFi was down 11%, now it's down 7%. NVIDIA was down 7%, now it's down 5%. So a little bit of recovery that we're seeing, even if stuff is still down. Okay, so Palantir. Let me give you guys my thoughts on Palantir. We got Palantir earnings tomorrow. I'm excited for it. It's always going to be exciting because Palantir is Palantir, and it's the stock that I've covered the most since 2021. Over 2,000 videos literally done on the company. It is a company I am emotionally attached to. So, they say don't get emotionally attached to stocks, but it's too late for that. But I still think I can be pretty damn objective because I'm so emotionally attached to it. And I can say that it's expensive and that it's trading at a 72 times price of sales with $3 billion in revenue is probably aggressive right here. So I think the emotional attachment I have still allows me to be pretty objective about it. Here's what I'm thinking. Number one, Palantir reports tomorrow. And it's a horrible data report because of what's going on with tariffs, but it could be a phenomenal data report if Trump resolves the situation with tariffs. If he doesn't, it's going to be a sucky day. And if Palantir's numbers are a little off, the magnitude from the tariffs volatility will accentuate the pain that Palantir feels. But if we are able to resolve, it'd be as bad. Did I freeze for a second? Can you guys hear me? Oh, you can see. Yeah, you guys could hear me, but it was freezing. Hold on, let me close out some stuff. That's why it's freezing right now. Okay, we should be better now. Yeah, we're good. We're good. Okay, so but you guys heard me though, right? The audio didn't disappear. The audio didn't disappear. The audio should be good. Okay, should be better. Okay, so the argument I simply made is that if tariffs volatility is bad, it's going to be bad for Palantir because Palantir is. Oh, you didn't hear? Okay, so let me just repeat what I said. Tariffs volatility will magnify the problems on Palantir. Tariffs volatility will magnify the problems on Palantir because Palantir is a high beta stock. Palantir trades at a very, very high multiple. Yes, my internet's getting hit with the tariffs right now. The aliens and the tariffs are taking away our internet. And dude, Palantir trades at 72 times price of sales. It is aggressive. Palantir, we were talking about this on Palantir Weekly, is as valuable as Disney and Pepsi, right? And so it's like when you're trading at that type of a multiple, and there's this unknown black swan called DeepSeek, which Palantir was able to resolve actually congruently with because their narrative actually is consistent with what DeepSeek is talking about when it comes to commoditized LLMs. But when there's a macro-driven problem with tariffs, that just hurts anything that's high beta, high growth, and that ends up affecting something like Palantir. So I think that's the first high-level thought I have going into tomorrow. There could be a hit on Palantir simply because of the tariffs volatility, which ended up happening overnight. Number two, I think that everyone in the Palantir community, at least the people that I think are pretty logical in the community, I'm not talking about the people that YOLO'd in at 84 or 75 because they thought Palantir is going to be the next NVIDIA. I'm talking about people that have been in it for a while, even if your average is in the 50s or 60s and you recently got into it. I think most people, just from the conversations I've had, are expecting a dip and quite frankly don't care about a dip because they actually have a 10 to 15 year horizon on the stock, which is very comforting to me because a lot of times when retail gets into a name, if they see a dip, they freak out, right? Which it's inevitable. It happens. It still happens to this day for Tesla. But Tesla's built such a deep community where it's like, even if Tesla falls 10, 15%, you get, or 20%, 30%, you get people that are excited versus scared because they have such large conviction in the stock. Like if you're experiencing FSD every day and you see some macro-driven tariff reason for Tesla to go back to 300, you get very excited about that if you actually believe in Tesla versus scared of that. And I think it's the same thing for Palantir. The run from 40 to 60 was faster than I think any run I've seen on a stock, at least in my 4 years of investing. I mean, the way it happened was so quick. 20 to 40 took time, 60 to 80 took time, but 40 to 60 was like that. So I think a lot of people wouldn't mind having a chance to reload. Would they be annoyed that their net worth would decrease by 20, 30%? Sure, I'd be annoyed about it as well. But I'd also understand how reasonable it is. I'd understand expectations get lower. I mean, the thing about NVIDIA, if NVIDIA gets back to 140, it's going to be amazing, up from 115. But at 140, NVIDIA needed to go to 170 to make people happy. Things have changed. Perceptions have changed. Dynamics have changed. Expectations have changed. Quite frankly, the pressure has been taken off of NVIDIA. And I think there's a lot of pressure on Palantir right now at 82 to go to 100 in a world where Palantir just went from 16 to 82. Like, I think all of us can logically come to the conclusion of, okay, no one thought it would go to 82 last year. I don't care how bullish you are. You did not think that was going to happen. The company themselves told us through their SEC documents they thought it was going to happen near 2029 and they thought it would be $70. That happened within the span of 365 days. If that's the case, then I think there is a lot of pressure to live up to that growth. And if that growth can't be lived up to tomorrow, which is okay because it doesn't have to happen all at once, then we could see a retracement. And if that retracement happens, that's an opportunity for longs to continue to go long. My final point on Palantir, and this is basically what we talked about on Palantir Weekly. So the first 2 points were, number one, tariff volatility can be bad. Number two, from the people that I've talked to, people are fine with a dip because they know that the valuation is extended. And if the growth can't match the expectations on the valuation, then that could create a dip. My final thing to say on Palantir is that I think that there is a world where they grow 30% top line, which would be about $800 million in Q4. The street wants like 775. I think they can get to 800 million, which would continue 30% growth. I think it's like 31% growth, which is amazing because now we have 2 quarters in a row of consecutive 30% growth, which is very important for a growth stock. That 30 number psychologically is magical to the street when it comes to software analysts. Number two, I think they can guide for 30% plus growth into 2025. Now, I don't think it's going to be 35 or 40%. I think if they get there, it would be a little foolish to guide that right now because, well, you can interpret it in a foolish way or in a smart way. It could either be, hey, we are the company that you guys thought we would be. We're guiding for 40% growth and this is what's going to happen. And that would, even if there's a dip, I think that's an easy buy the dip because it's like, all right, so they're like, Palantir is like legit. 40% growth is like, that's not a joke. There's very few software companies that are growing 40%. And that'd be a big deal. Or that's, hey, we probably shouldn't be this excited right now because anything could happen that can mess up our 40% growth. B, we want to under-promise, over-deliver. So let's guide for like 32% growth, which I would still be very happy with because that means Palantir thinks for 2 years in a row, they can get 30%. Or for their first year, they can get 30% because last year they were like 25 to 30%. On a trailing 12 months by Q4 of 2024 or 2025, they will be plus 30%. And hopefully by the end of the year, they actually bring up that to 35, 40%, which I did a video a couple of weeks ago on how I think they can get to 40%. I do think it's possible, especially with Karp speaking about how much insatiable demand they have around their products. I think there's a world in which that happens. Those are my expectations. I think we get 30% growth for the quarter, which would be 800 million in revenue. The EPS, the SARS thing, I think this thing is stupid. I think the market's expecting 11 cents. We might come in at like 2 cents because of the EPS hit because of SARS. I think if the headline on all the business media outlets on Tuesday morning is Palantir missed 90% on a earnings per share SARS contraction, then I think most people would be smart enough to be like, they didn't actually miss on EPS. It's not like they're struggling with profitability. They had some external events in terms of stock-based compensation that led to that decline. And I think most people are smart enough to be like, that's not something we're going to really take into account. Now, the algorithms might still dump it, which is fine. That's a buying opportunity, in my opinion, if that's the reason it's getting dumped. But I don't think that's the biggest deal in the world. The biggest deal in the world to me is going to be revenue guidance. That's it. Revenue guidance. Can we guide for another 30%? If we can't, I think there's going to be issues, bro. If we can't get the 30% for 2025, I think there's going to be issues. I'm not saying 27 or 28% is not good, but it's just the street's going to be wondering, why are you as valuable as Disney and Pepsi if you can't even grow 30%? Because Disney and Pepsi are not growing 30%, but nonetheless, Palantir is valued in terms of market cap similar to them. Right? And that's just something logical that we can't deny. Now, if you do the sort of reverse engineering argument, which is that, oh, the TAM is unlimited. And so because the TAM is unlimited, you judge it based off the TAM. I don't think that's a bad argument. The problem is the street's not going to accept that argument at this multiple, in my opinion. The street's going to be like, okay, like, sure, the TAM is unlimited, but if they can't execute to match the growth to be able to live up to the TAM, what are we talking about here, right? Why are we going to get them the multiple? I think 30% is the magic number. And even on 30%, we could still see a dip, but at least it's not below 30%. I think once you go below 30%, you become every other software company that is nice compounding at 25, 26%, but it's not 30%. 30% is a very, very important number at the numbers that we're trading at right now. Having said that, I guess the final thing I'll actually say on Palantir right here is that there is a world in which this quarter knocks it out of the park. They guide for something substantial. Their free cash flow margins go through the roof. Their adjusted operating income margins are already at almost 40%. They're at 39%. What if that goes up to 42%? Their rule of 40 is at 67. What if that gets up to like 69, 71? I mean, there's a lot of ways. What if their cash liquidity goes from 4.6 billion to 5 billion? What if they say they're buying back another $1 billion worth of shares in addition to the $1 billion they already authorized last year? I mean, there's a lot of different things Karp can pull out of his hat to make people excited about the future of Palantir. I think Karp as a performer tomorrow on earnings is going to be fantastic. I think Sham as well is going to be very strong because they're going to be echoing these arguments about LLMs being commoditized and Palantir having the secret sauce, aka the ontology that makes those LLMs valuable in the first place. I think they're really going to harp on it. I think they're going to say America's growing because the demand for American companies to embrace that technology is massive. They're going to take some shots at Europe tomorrow. So you got to be ready. Germany, France are probably going to get some hits in terms of their inability to embrace AI. But I think the performance of the CTO and CEO tomorrow is going to be just like it's been for the past couple of quarters. It's going to be really strong. It's going to inspire people. It's just a question of can they put up the numbers to match the qualitative analysis they've been giving us for the past year. And the reason Palantir went up from 40 to basically 60 in like 3 weeks off of Q3 earnings was because they brought in the numbers. They brought in 30% growth. And so tomorrow, we're going to have to see, can they continue that growth? And I honestly, I am pretty optimistic they will. The only thing I'm not optimistic about is the macro headwinds they're facing with tariffs, which is not really a Palantir thing, it's a macro thing. And also the valuation we're trading at, is that going to be enough trading at this valuation to be able to withstand only 30% growth or only 32% growth? I don't know. My gut feeling is yes. And my gut feeling should be no, because obviously, 30% growth isn't enough to justify 80 times price of sales. But my gut feeling is yes, because Palantir is trading like a unicorn stock because it's a unicorn, and every upgrade I've seen from all these analysts are acknowledging the unicornness of Palantir. Now, maybe I'm just saying it's trading like a unicorn because we're frothy right now, and that froth can disappear in an instant, and then that unicorn turns not into a unicorn in terms of its valuation, and Palantir gets re-rated. Or if OpenAI is ready to raise at almost $350 billion, the street's going to be looking at Palantir, which is a public company actually operationalizing AI and is profitable, and say, look, we get it's expensive. We get the growth is not like NVIDIA level growth, but we'd rather be in this than anything else in the market when it comes to AI, because we do think they have the best shot of actually pulling it off. That is a real possibility that can happen tomorrow, even if the numbers are less than stellar. And if that's the case, then we could see multiple expansion on Palantir. We could see the multiple staying where it is, or we could see, 3 to 4, 5% down instead of 20, 30% down, like some people think we could see on Palantir. And so those are my thoughts. Those are my thoughts on Palantir. David said, Amit, you've spent the last 15 minutes just to say Palantir is either going up or down. Well, basically, that's what I do for 4 hours every day on the market open. Either Palantir is going, or not just Palantir, either the market's going up or down. So yes, you've described my job as a traffic coordinator, either green or red, but hopefully it's a little exciting as you guys watch me coordinate traffic. By the way, Luka Doncic, are you kidding me? Are you freaking kidding me? I'm not going to get into it, but dude, talk about a wild weekend. I saw that last night and I was like, what is going on? Like legitimately, what is going on? Anyway, here's CNBC's piece on tariffs.
In this 1.1 million square foot warehouse in Fort Worth, Texas, millions of dollars worth of goods are stockpiled ahead of potentially sweeping tariffs expected to be levied against China, Mexico, and Canada.
This is a import-heavy economy. Most of what we consume comes in from Southeast Asia and China. A lot of those goods might be coming in and have a tariff slapped on them.
Front-loading is a tool companies use to buy and store their goods in advance, in this case to avoid pricey tariffs. Big brands like Walmart and Columbia Sportswear are executing this strategy. Walmart's imports from China rose 33% from 2023 to 2024. Columbia Sportswear imports went up 50% during the same time and jumped over 80% during the March to December period. At the same time, container imports from China to the United States have surged.
I think 2024 have really seen a lot of front loading happening. At first, shippers needed to react to the Red Sea disruption. And now it's Trump tariffs coming into force.
But for some companies, front loading is not an option. Just from the execution standpoint, I'm just curious on how it will happen, how folks are going to navigate.
The point you're making is any business manager's worst nightmare, which is planning for the unknown. The uncertainty of this situation keeps me up at night. I'm often asked, what are you doing? How are you planning for it? And my answer is, I don't know.
President Trump said he expects to put a 25% tariff on Mexico and Canada beginning on February 1st, and discussed a 10% tariff on China. A tariff is a government-imposed tax on imported goods and services. And if tariffs are enacted, it's not only companies who will see higher prices, consumers will as well.
Prices will definitely go up on everyday items. So from the cars we buy and the gas we put in them, to the iPhones, laptops, and tablets that we're so dependent on, to the clothes we wear and the food we eat like avocados, corn, tomatoes, all the prices are going to go up.
So how are companies preparing for potential?
I don't eat avocado toast, so that's not going to affect me. But for those that do, I feel for you.
tariffs and what impact will they have on shippers and consumers? CNBC traveled to Fort Worth, Texas, a major hub for logistics companies located a few hundred miles from the Mexican border, to find out. Paul Brazier is the head of global supply chain for ITS Logistics, a leading U.S. shipper with annual revenues of about $1 billion.
So tell us a little bit about this facility.
Well, we're in the heart of one of the most important distribution center areas in the United States. Dallas-Fort Worth services pretty much 75% of the United States. Within about 2 days, everything comes through here. So you've got electronics, you have infrastructure goods, you have food.
The warehouse is also filled with Chinese and Mexican goods and components. To avoid potentially expensive tariffs, many of ITS's clients have front-loaded their products.
Starting in November of 2024, shippers of all sizes started bringing in their product to avoid the Trump tariff.
Lenovo imports from China rose 22% from 2023 to 2024.
This is another reason we had more inflation in the past 3 months. They front-loaded to try to escape the inevitable tariff, which now is here today.
How many of these products that we're surrounded by with are sourced from China?
I'd say well over half. It comes in large quantities. It comes in ocean containers and trucks.
The biggest category of product here being front-loaded, components used in infrastructure projects.
So right now you're looking at 500,000 square feet of product that is used for domestic consumption. These are components that go into the things that are building our bridges, our roads, and electrical equipment here in the States. Especially on the infrastructure side, there's a ton of Chinese-made goods that are being shipped forward right now and have since November.
And what's the reason behind the front loading, particularly when it comes to the components for infrastructure?
Well, those budgets are made 2 or 3 years in advance. And if you have a 20% increase in the cost of goods, that blows most of those budgets out of the water.
Data from Import Genius backs that up. Imports of solar panels, AI server racks, backup power supplies, and lithium batteries that are used to power data centers surged in the second half of 2024. Consumer goods like sweatshirts and smokeless fire pits are also sitting on these warehouse shelves.
Walmart and Columbia Sportswear, they're front loading in a lot of product ahead of these tariffs to try to mitigate those increase in costs. Warehouse is not cheap.
The medium size and the small importers are the ones that are probably the most adversely affected by these kinds of decisions. The larger players in the market, they have a huge distribution center network. They have the infrastructure in place to be able to navigate these fairly easily.
In the U.S., the top products being pulled forward include sneakers, housewares, appliances, and auto parts.
And that spells big business for companies like ITS Logistics. ITS Logistics makes money on several different fronts. They make money not only by moving each piece of product, they also make money by storing the items. And so those extra costs, are they also passed on to the consumer?
Yes, all costs, like anything in commerce, usually get passed on to the consumer.
That part right there, I think, is also really important. There's a lot of people saying that the costs are not going to go to the consumer. To be intellectually honest, I have not found out an argument for why the cost is not going to be given to the consumer. And I would love anyone to give me any argument here. But I know Trump's saying the consumer is not going to pay for it. I haven't found any evidence to validate that if you put on a tariff, the cost doesn't find its way to the consumer. So, I mean, if the consumers inevitably have to pay for it, that increases inflation, which makes it harder to get rate cuts. Maybe there's some arguments for why they don't get on the consumer, but the majority of the research I've done says we're going to front the bill, and obviously that's going to be inflationary.
Rick Muscat is the president of Dear Stags, a family business that makes $50 men's shoes sold at Macy's, Kohl's, JCPenney, and Amazon. The business imports about 2 million shoes annually, and about 98% of those are made in China.
So we're in your showroom. Who exactly comes here?
This is where we work with most of our retail buyers. They come usually every December and June for a major trade show.
Footwear, at the center of the last trade war, is back at the forefront of the dispute with China. But unlike its larger competitors, Deere Stags doesn't have the ability to front load.
Walmart has the size and the capabilities that companies like Deere Stags doesn't have. They have warehousing, they've got trucking networks.
Walmart sells an enormous amount of shoes in this price point, moderate price shoes. They have more levers to pull than we do. So during COVID, when container rates skyrocketed, they chartered vessels. They could buy a whole vessel, which will have hundreds and hundreds of containers. We couldn't do that.
Footwear companies already pay hefty tariffs. There are over 430 duty classifications on imported shoes. Some of those tariffs were established in the 1930s.
The shoe has a leather upper, and men's shoes with a leather upper pay an additional 7.5% duty on top of the pre-existing duty, which was 8.5%. So we now pay 16% duty on this shoe.
Muscat fears additional tariffs will impact not only future orders, but those already in place.
How many shoes that could, in theory, be out on the water that you have ordered right now that could be subjected to a possible tariff, and it's not priced in yet at the Macy's of the world?
There could be 200,000 pair that are made and heading towards us that might have a tariff when they arrive that we didn't know when we bought those shoes.
This is the kind of thing that causes importers, shippers, customs brokers nightmares, because you're essentially changing the price after it's been imported, and who is going to have to pay that difference? It becomes a logistical nightmare.
To prove he's on the hook for the tariffs, Muscat showed us his invoice from U.S. Customs.
Can you explain to us what exactly this is and show us in terms of who is paying the tariff?
When we import the shoes into the United States, U.S. Customs and Border Control sends us an invoice and takes the money out of our account. Once the importer pays that tariff, it's part of our cost of goods, and it affects our selling price accordingly. It lists the product we brought in and what the duty rate is. And in this particular group, we had 3 or 4 different products. Some were at 6% duty, some were at 12.5% duty. And the aggregate of all of this came to a total duty of $6,133.90. For the shipment, we were billed that amount, and U.S. Customs pulled that amount from our checking account at Chase Bank.
So not China's bank account,
No,
but
we
your
paid-
bank
we paid
account.
for it, yes.
Muscat says higher tariffs will translate into higher prices for his consumers.
The increase in the tariff will ultimately show up at the price tag when a consumer goes into a store, and the consumer will pay more.
Prices are definitely going to increase. And I think that's a big message that consumers need to be aware of, is tariffs are paid for by the consumer.
There's no capacity in the United States to make these shoes. We would have to open up factories in the United States, which is capital intensive. We'd have to build factories. The machinery used to make shoes is no longer made in the United States. Shoemaking is very labor intensive by its nature, which is why production has moved over my career around the globe to low labor countries. I believe that the chip industry got an enormous subsidy from the federal government to build manufacturing plants in Arizona with billions of dollars. But I haven't heard anything about government funding coming to the footwear industry for us to build shoemaking factories.
ITS's Fort Worth warehouse is located about 400 miles from Laredo, Texas, the largest land port in the U.S., accounting for 35% of all U.S.-Mexico trade that crosses the border.
And what about Mexico? How much of Mexican trade comes here?
More and more. There's one whole side of this warehouse that's probably 50% Mexican goods.
But higher tariffs on Mexican goods could disrupt that pipeline.
The expansion of tariffs on Mexico and Canada, how is that going to impact the flow of trade?
Mexico is our largest trading partner. It's going to adversely affect it in a myriad of ways. It's going to increase the cost to move goods. There's not going to be enough equipment to load either northbound or southbound. If there are additional fees added to just the movement of goods, it's going to impact the consumer both here and in Mexico. We could get to a place where that flow just stops.
In 2024, Mexico was the largest importer of goods to the U.S., ahead of China, accounting for $466 billion in imports. Mexico also produces 3.5 million vehicles annually. 76% of those are destined for the U.S. market.
Distribution facilities just like this one also handle exports. And the big threat with the trade war is retaliatory tariffs.
Mexican President Claudia Sheinbaum said her country would hit back if tariffs were imposed. The nation's economy minister said 25% tariffs on Mexican exports would impact U.S. companies operating in Mexico, particularly automakers, costing 400,000 jobs.
The other item that we may not want to forget here, of course, is that the other countries will retaliate. China will retaliate. Mexico will retaliate. European countries will retaliate if we become more hostile for them.
25% tariffs could reduce Mexico's GDP by 1.7% over the next 5 years, while increasing the country's inflation rate by 2.3%.
So 25% tariffs means they lose 1.5% of their GDP, increase their CPI by 2.3%. There's no way in hell they're going to allow that to happen without retaliating or without getting a deal done. Like, the impacts of that would be detrimental for the next decade for a country like Mexico.
U.S.-Canada trade may also be thrown into turmoil. Canada, the largest source of U.S. petroleum and crude oil, a top mineral provider for EV production, is also a major supplier of chlorine used to disinfect drinking water. Almost all of Canada's chlorine exports go to the U.S.
How regressive is a tariff when it comes to the impact on the supply chain?
Well, it's a pass-through cost. Everything that we do gets passed to the consumer somehow. And this is another additional cost in supply chain that needs to be accounted for somehow. And in most cases, that gets passed on to the consumer as well.
That's it. That is it. I'll put the video in the chat if anyone wants to share the video with anyone else. But yeah, I think the biggest takeaway I got from that is it gets passed to the consumer. And they interviewed a lot of people that run warehouses and complex supply chains, and their argument is that it gets passed to the consumer. It's the nature of how business operates. I mean, if McDonald's has to pay more for their inventory, they're going to make the burger a bit more expensive. And so, I don't know, dude. It's very complicated, very intense. The United States has benefited, and quite frankly, the world has benefited from cheap labor for a long time. That's why our goods are so cheap in the States. But that cheap labor only comes from producing our stuff outside of the country. I mean, Apple, the iPhone would not cost $1,000 if Apple had to pay people in the United States to build the iPhone. It's night and day. Night and day. There's no way that it would cost this much. And Apple still has a ridiculous, or at least maybe it would cost this much, but Apple shareholders would not be as wealthy as they are because I think it's 40% margins Apple has on their phone, something like that, 46% gross margins. That would go down dramatically, like 20%, 30%. You can't have those gross margins with those input costs. So I don't know. I don't know what Trump really wants out of this. I get the China tariffs. I even get the Mexico tariffs because the immigration stuff. The Canada stuff, I'm just like, okay, I get there's issues there. But like, why exactly I feel like there's something deeper. In video right here, down 6%, that he's thinking about when it comes to Canada. And tomorrow we will have some resolution, at least in terms of clarity on if these tariffs are officially going to be instituted after he has his meeting with Trudeau, or if there's been a way for them to not have to do these tariffs because they came to an agreement. I guess tomorrow we will find out. Bitcoin right here at 94,000. Apple's down 3%. S&P's down officially 2%. It was down 1.5. Now it's down 2%. Robinhood down 8.7%. SMCI down 5%. Amazon down 3%. Google down 3%. Baba down 4%. Meta, anyone who bought Meta at 700 and now it's at 665. So the Meta 700. I mean, not even just Meta. I mean, if you bought anything last week, you're probably down on it. So anyone who bought it, which I did buying last week. So everyone who deployed a little bit of cash is definitely feeling some of the pain right here. Reddit's down 5.7%. Shopify's down 7%. But see, a company like Reddit, right? Reddit's trading at a what is the price of sales? They're trading at a 25 times price to sales. No, 30.9 price to sales. Does Reddit deserve a 31 time price to sales? Like those are valuations I look at in the market and I'm like, yeah, probably do need to see some contraction. That doesn't mean Google needs to go back to 150, but it definitely means Reddit maybe doesn't need to be trading at $200, right? And so I think it's a weird spot in the market. TSM right here at 201, down about 3.5%, because there are some companies that are expensive, even if the broader market necessarily doesn't have to be expensive given the earnings growth. But granted, Reddit reports in a week. What if they blow out earnings and they say they're an AI play and they have all their data, they're getting all this demand, and then the market's just like, all right, well, if AI is the future, Reddit's going to be AI player, right? And money comes back into Reddit. It's very hard to predict based on pricing metrics like PE or price of sales, because I mean, look at CrowdStrike. It's back at a 700 PE, reaching all-time highs here at 398 or close to all-time highs. Does that make sense? No. But is CrowdStrike one of the best cybersecurity companies in the world? Yes. And it's very difficult for IT budgets to take away their cybersecurity spend before they take away anything else. So you got a lot of nuanced factors to take in to determine what equity prices should look like. It's just these tariffs create a whole host of volatility. MicroStrategy right here down 9.4%, that I think no one is fully able to comprehend. But I guess over the coming weeks, we will figure out how this plays out. Trump wants to blow up Pelosi's account. Yes, that's exactly what Trump's doing. He is blowing up Pelosi's account. All right, guys, that's it for me. Thank you, everybody, for joining. Hopefully you guys got some value out of this Sunday future stream. We will be live tomorrow on the Market Open, 8:45 a.m. We have a bunch of news to get into tomorrow morning. We're going to keep analyzing these headlines. We also have Palantir earnings tomorrow. So very big day, 3:30. I'll be live on the show. We'll have some friends with me. And regardless of what happens to Palantir stock, I mean, earnings are always important because we want to see the trajectory of this company continue to go in the right direction. And it's going to be a big day tomorrow. We'll see what the reaction is to tariffs. And we'll see if Trump can get a resolution with Canada and Mexico, and then we'll have Palantir earnings. All right, that's it. Thank you, everybody. Appreciate you all. I'll see you guys tomorrow on the Market Open. Bye, everybody. Have a good one. Good night.